right, we're back from our lunch break. It's now 1:33. And I will turn the gavel over to Vice Chair Lieber, who will present the informational hearing, item 7, information hearing on wildfire disaster relief and recovery status. Vice Chair Lieber.
Thank you so much, Mr. Chair. Colleagues, I called for this special hearing in April after learning how many of our wildfire survivors have been systematically underinsured for the replacement value of their incinerated homes. This becomes a second tragedy after their home vanishes, learning how they are vastly underinsured, sometimes by hundreds of thousands of dollars. Is this why such a small percentage of residents have been able to rebuild after fires, even years after the fire occurs? Given that the State Board of Equalization oversees property taxation in our 58 counties and the tax on insurers, we are alarmed if communities cannot rebuild, resume property tax payments which directly affect revenue for our schools, cities, and counties, most often just at a time when they need to provide more services, not fewer, to the community. We have amazing experts here today to provide fresh, new facts with their data analysis, their on-the-ground experience, and with ideas on how property owners should have the right to knowledge, the right to fully insure for full replacement value if they ever lose their homes. I'd like to first give a thank you to Ms. Carmen Balber, who spoke at Mr. Gaines's recent hearing on the insurance marketplace in California. She was instrumental in guiding us on this hearing. And I'd like to also give a special thanks to the San Francisco Chronicle and to reporters Susie Nielsen and Megan Muntz, who presented to the public a very comprehensive, valuable, impactful, investigative series regarding this issue. And I know that in doing so, it was not only within the scope of their labor as journalists, but also very much included a great deal of emotional labor talking to the victims of our firestorms in California, which we know are going to increase in the future given climate change and not be decreasing. So this makes it an even more salient issue. And again, I thank the Chronicle for devoting the space and the time and the resources to fleshing out this issue. And so now we will proceed to the presentations of today's experts. And more than one of them has asked if we can please hold any questions from the board until after they make their presentation. But I know that there will be questions coming. And first up, we have someone who is no stranger to the Capitol community, Ms. Amy Bach, Executive Director and co-founder of United Policyholders. This is one of the top consumer and insurance policy advocacy organizations. They are nationally recognized as advocates, and she is nationally recognized as an advocate, an expert on insurance trends, claims, coverage, law, and public policy matters. Amy Bach has performed government service as a member of the Federal Advisory Committee on Insurance, a consultant to the California State Senate, and special counsel overseeing the complaint handling reforms at the California Department of Insurance. So a special thank you to being here with us today, please.
Push, there we go. Thank you so much, Ms. Lieber and members of the board here. I appreciate the opportunity to talk to you about an issue that has been dogging the consumers that we serve and the disaster-impacted households that we support through our Roadmap to Recovery program for many decades, as well as trying to tackle underinsurance and prevent it has been a prime focus of another program that we run called the Roadmap to Preparedness, where we take lessons that people have learned the hard way after disasters and translate them into guidance for people who are either about to renew their policies or have been non-renewed and are shopping, or just generally want to avoid some of the problems that they've read about in the paper. So we can go to the next slide. I really appreciate you looking into what you already heard about me. The only thing you need to know about United policyholders, as I was telling Mr. Gaines before we got started, that we have, in some ways, we've made a full circle. When we started as a working group right before the Oakland-Berkeley fire, a person on that working group is sitting right here, David Schaefer, independent agent based in Northern California, and a very rare bird at the time. Not as rare now. We have a lot more producers that are trying to work on solutions for the crisis that we are all trying to move through here in our marketplace. But again, having people who really understand the complexities of the market and why underinsurance is such a stubborn problem is really important. So you do have some good stakeholders here with you today. And also, I echo your thanks to the Chronicle. I mean, I never thought I would see insurance stories on the front page of my local paper day after day that would teach me things that I don't know, and I'm a lifetime or a career consumer advocate. So lots of really, really good fact finding has been going on this very topic. Next slide, please. Keep going. Great. So just a very quick primer. This is a typical declarations page. You can see the example. There's the dwelling policy. There's the circle or the highlighted areas are 2 endorsements, right? Extras. So the base policy, that person has the 300,000 limit, plus they've got their other structures there. And then this person had purchased some building code upgrade coverage. And that's typically what you'll see on a home policy. And those are kind of some of the buckets. Next slide, please. And then, so the base limits plus the endorsements plus the policy wording is what gives you your maximum available benefits when you're trying to figure out how much money you're going to be able to get out of your policy. So 2 of the strategies people can use, in addition to trying to get the number right in the first place, the dwelling coverage number right, is they can buy these 2 endorsements. They can buy extended replacement cost coverage, or they can, and as this slide tells you, that feature comes in, you can buy it as a 25% bump, a 50% bump, or a 100% bump. And what we are finding is that people who have a 50% extended replacement cost coverage feature tend to be okay, relatively speaking, after disasters, but most people don't have that. And, you know, it's one of those things where if you work with a really good agent and that agent is able to put you with a company that offers that big of a bump, then, you know, you have a better than average chance of not being underinsured. But generally, lots of people don't have that. And so that's, you know, and I kind of skipped to the punchline here because one of the main recommendations that we're looking at that might take a bite out of this problem would be to require insurers to offer a 50% or higher ERC endorsement. Just an idea, just one idea. Next slide, please. There's also a bucket you can buy that gives you extra coverage for your building law and ordinance. So you have an older home, building codes have changed, it gets damaged or destroyed, you need to put it back, you have to make improvements. Your policy says we only pay for what you have, we don't pay for improvements. So this is the bucket of coverage that can give you the money to be able to rebuild and get your county to give you a permit saying this building is in compliance. We did, among the things that the legislature has done over the years to try to remedy underinsurance has been to require that insurers in California include 10% of law and ordinance coverage. And so again, a step in the right direction, helpful, still is not has not been the silver bullet. Next slide, please. So my organization, we've been around since 1991, so 3+ decades of helping out after wildfires, and we have found that in that period of time, that a very, very steady figure of over 50% of wildfire-impacted homeowners have found themselves underinsured. It's not a new problem. It's a stubborn problem that we've been trying to get at for many, many years. And so that means that the sum of their dwelling limits, their other structures limit, their inflation guard, and if they do or don't have those two endorsements, the total of those amounts is still too low to cover what it's actually going to cost them to reconstruct their home. Next slide. And how do we know this? My organization does surveys 6, 12, 24 months after wildfires, and also we hear it loud and clear from consumers. We hear it from our partners at the DOI. They get a lot of complaints about underinsurance. We hear about it in the media from people who take their story to the media to say, gee, I thought I was covered, and turns out I came up grievously short. Next slide, please. These are just the results that you can see on our website. After the North Bay fires, the number was about, I should not be vain. Let's not be vain. 64% after the North Bay, Camp 60, and then after 1 year of our survey in Boulder, Marshall Fire, which is Colorado, really high, 80% underinsured in that area, various reasons. Next slide, please. This is just, again, a typical way that you'd see our results, and you can see those on our website. Next slide, please. Same thing. These are just, I'm just proving that we are not making this up. That we do these surveys, we ask people, and they answer. Did you have enough? Did you not? And then we break it out by insurance company, and we really don't see a whole lot of variation across insurance companies per se. That's a general statement. I think people who work with a good agent and or are with a higher end company typically are less underinsured. People who've been with Chubb, people who've been with Amica Mutual in the old days, Fireman's Fund, you would see less folks in those categories being underinsured. Next slide, please. But it is kind of across the board a problem. So this is just another illustration. So on the left is a big underinsurance town hall with then Insurance Commissioner, now Congressman John Garamendi, after the 91 fires, where he asked everybody, are you underinsured? And pretty much that's how many hands in the room went up. Then there, 2007, Witch Creek Fire, San Diego. This was a press conference that victims did to call attention to their underinsured situation. And then on the right is a T-shirt that was made by one of the groups, I'm underinsured and so are you. Next slide, please. So what accounts for this phenomenon? Well, applicable law doesn't reflect reality is one part of it. The reality is consumers do not know current construction pricing, what it would cost to reconstruct their home, and they reasonably assume that their insurer and or their sales representatives do know, since they pay claims all throughout the year, different parts of the country. Consumers focus on the cost of the product, and then this is one of the factors I think that can get overlooked. Consumers assume that an insurer, agent, or broker wants them to buy more insurance than they need. That's just a typical consumer view of, this company wants to upsell me, right? It's just a logic. It's not true in this context at all, but people still have that idea. And of course, that puts pressure on agents to try to find that sweet spot of the price that the consumer will pay, not wanting their customer to think that they're trying to push them to spend more than they really need to and all that. Insurers continue to compel their sales reps to use replacement cost calculator software programs that consistently underinsure homes. You'll be hearing more about that from both Matt Everson and Ken Klein. And then finally, accurately estimating what construction costs will be in the future does require some degree of speculation, and that's why those that's why there should be some padding built in, and you assume that there would be, and that's why the insurers have the inflation guard, but it doesn't seem to work to prevent underinsurance. Next slide, please. So from the consumer's point of view, insurer ads and agents induce them to rely that the policy will restore their home to pre-loss condition, but in fact, policy conditions and chronic inadequate limits render that reliance misplaced. Next slide.
A point of order, Madam Vice Chair. We have a 10-minute speaker
Oh,
limit.
gosh. Am I going over?
Thank you,
Okay.
Mr. Schaefer. We've divided the time up a little bit creatively, so everybody doesn't have the same amount of time, though. But we'll make sure to tell folks when
You
they're
asked
time.
for an hour, and I think it's a very important hour.
Yeah, and at our last meeting, that was extended to 2 hours. So, but we'll be sure to cut people off when it's needed.
Thank you.
Thank you.
Thank you. So the applicable law, I said law doesn't reflect reality, right? People think that their insurance company is doing the calculation, but in fact, the law is that an insurer and its representatives only have a general duty to procure insurance unless they undertake a special duty through words or actions for which there's evidence. Most people have little to no concrete evidence of their conversations with agents or brokers at the point of sale. They don't really, if they say, oh, I know I asked for full coverage and I know she said you have it, that's not enough in a court of law to have there be liability for that. And efforts to pass laws placing the duty on an insurer to accurately estimate dwelling replacement costs and make up the difference if they don't, have not succeeded, but I think, as you'll hear from my colleague Ken, that still may be something to pursue as a solution. Next slide. Thank you. And this is just more information about how the law is, but I've already given you the bottom line. An agent just does not have the duty to volunteer that they should buy additional insurance coverage, even though people would think that that's what they're paying the commission for. Next slide, please. So current remedies for the underinsured, you can try to seek a retroactive reformation and offer to pay the difference in the premiums of what your limits should have been. You can use leverage to convince an insurer to pay above limits. Maybe there were errors that were made in issuing the policy. If you do have evidence of communications that the agent or broker did or the insurer did undertake that duty, that can work. Media pressure, political pressure, assistance from the department, a lawsuit, which of course we're not here to push. Most people, the last thing they want after they've lost their home in a disaster is to get involved in a lawsuit. So not really the solution, I think, that we're looking for. Sources of money for filling insurance gaps, SBA or commercial loan, lawsuits against an at-fault entity like a utility, that's become a big source of funding for underinsured wildfire survivors. Some people use their contents funds to finance their gap. Next slide, please. So this is the sequence that our organization recommends to people. Get a reasonable idea of how much your home should have been insured for, collect all evidence that gives you leverage to get that retroactive increase. And this is the advice we give consumers who want to go to the mat. And the reality is that many people, not only do they not have the evidence, but they may have actually been in a situation where the agent or broker recommended that they buy more, and they said, I can't afford it, I don't want it, and that's just a reality. Next slide, please. So co-insurance clauses have not prevented homes from being underinsured. In fact, today, with the situation we've got in the marketplace, a lot of people and businesses literally can't get an insurer to offer them a proposal that includes full coverage. Next slide, please. So some of the things we've tried so far. Mandated disclosures, the legislature has done several rounds of mandating that insurers disclose what coverage the person has and what they could get. Public education, my organization is heavily involved in that, trying to help people not be penny wise and pound foolish, not just shop for price alone, and all that. There is a congressional requirement that insurance on homes with federally backed loans be insured for their replacement value. There's a lot of debate around that right now. because of what's going on in the marketplace. And Florida, in fact, the legislature passed a law that says that it's okay for an insurance policy to not provide replacement coverage on the roof. So we have some tension there. And then we have the regulations here in California that require accurate estimating at the point of sale, plus the mandated 10% code upgrade coverage increase. Let's go to the next slide, because I know time's an issue. We're going to jump, so you don't need all these, but this is the code section. Next slide, please. That after years of work and a big hearing, the Department of Insurance promulgated this regulation. Next slide, please. That requires an insurer's estimate of replacement value to have all these things, all these items, very specific, including type of foundation, et cetera. Next slide. And all these things that in the fact finding, we determined that the failure to include some of these items in an estimate is what causes them to be low. So they took this approach of like, let's mandate that everything get considered. Next slide, please. But the code goes on to say that the law is the law about just the general duty that the insurer and its representatives have. Not necessarily to recommend adequate, but to recommend insurance for the property. Next slide. More of a statutory reference, we can move on. And then finally, this is just a snapshot of some of the rack cards my organization is distributing all over the state, thanks to the Governor's Office of Emergency Services LISTOS program. We're able to be out there all across the state in communities, educating people and trying to get them to pay attention to a topic that no one's usually that excited about paying attention to, but that is incredibly important, especially in this state where we have so much vulnerability to wildfires. So I want to thank you for the work. We're available to help you in any way, and we do appreciate the hearing. Thank you.
Fabulous, thank you. Any questions? Mr. Gaines.
First of all, I want to thank you for your presentation. It's very thorough and highlights a lot of the challenges involved. I'm just wondering, I think one of the big issues too with the wildfires is when you lose so many homes and you've got real problems in terms of finding a contractor.
Yep.
And so there's not enough contractors, so there's more demand than there is supply, and then the cost of reconstruction goes up dramatically beyond what could be the policy limit.
This is a conversation I've been having with Tony Signorelli at the Department of Insurance, who oversees the Consumer Services Bureau. He kind of thinks that's the sweet spot, the 50%.
Okay.
I think, again, you'll hear more from my colleague, Ken Klein. He's done a ton of research on this, and I think that's sort of our best shot. Right. I mean, I think, it's a lot of people don't rebuild right away, right? That's what we're seeing, and there's, I think, 7 permits have been pulled for the Palisades, and that's not a lot, right? So I think you'll hear more about, how bad is demand surge on this. But there's no question, insurers have not been estimating the values correctly.
But in terms, I'd just like to interject on that, because how quickly is government reacting, right? So how many barriers are in place that are preventing a homeowner from getting that permit so that they can start the reconstruction process? And if there's inflation in the market and it takes you a couple of years to get that house rebuilt, then you're running into issues with increased cost of construction as a result of the delay of government. And I just, they're having the same problems in Maui. Yeah. And so how do you streamline the process so that people can get back on their property and rebuild quickly?
Well, there's a tension here, right? Because we don't want them just building back any old thing, right?
Right.
Now that we know how important it is to rebuild resilient so that you'll be able to get insurance, and that it'll be less likely that your home will burn again. It's really important that that we do enforce the building codes so that people don't just slap something up, I hear you. I think there's a lot of push and pull going on right now
Yeah.
in SoCal about, can we expedite the permits? At the
Yes,
same
yeah.
time, we don't want people with the same, repeating the
I
mistakes
wish I
of the
had some water
past.
for you.
Is that,
There's
thank you.
cough
Yeah,
drops coming.
There we go.
Thank you. I was camping this weekend and I think the campfire got into my
Okay.
lungs or something. So, yeah, I mean, that's kind of that's the bugaboo, right? Like
I had
there's some
heard-
people who are saying,
Yes.
waive
Okay.
waive the energy efficiency, rules, or waive the 7A, but we really can't afford that. So, I mean, there's a lot of innovation with, where you can do like group rebuilding where people, it's kind of like they did the coordinated debris removal. You can get some economies of scale that way. I think we have some opportunities, not to force people to do it, but to buy in bulk and try to,
Yes.
have the whole, like, group rebuilds where the 7 people on the block, hire the same
Right.
outfit and all that.
I've heard that some of that's happening in LA. that
Yeah.
There's some contractors coming in that can build a lot of units, and maybe you have a few different designs, and then you get through the process more quickly.
Right. But the fact remains, as you'll hear from my colleagues, the replacement cost calculators that the carriers give, their producers at the point of sale, I won't say garbage in, garbage out, that I will say you've got to take enough time. And actually, Mr. Schaefer was courteous enough to let me spend a whole day at his office once, many years ago, watching him input the data. And he's a diligent agent, and I'm sure you are too, and your daughter as well. If you want to do this in 15 minutes, you can do it in 15 minutes, but you shouldn't, right? Because then you're going to miss features, which is what the DOI was sort of getting at when they did that long list, was like, well, don't quick quote this. Because these software programs, their defaults, a lot of them are, building a tract home development in a flat area when a lot of these areas don't have those characteristics.
So you need more criteria in that software.
Right,
So that you can get the nuances.
right.
Thank you.
Thank you.
And Mr. Vasquez.
Thank you for your presentation, Ms. Bach. And I was looking, when listening to your presentation, I was just wondering, California has already been struggling to keep insurers in California. And with especially with the increasing fire risk that we have out here. How do you believe the state can strike this balance between keeping insurers in the state while guaranteeing, an affordable policy?
Right. Well, I'm laughing because it's, all we talk about, it seems like all day long. I have some confidence that the sustainable insurance strategy is going to get us back on track in terms of the regulatory system that insurers were so unhappy with. That's been part of the problem. I think, some of the bills that are making their way through the legislature this year, the one that would allow the FAIR Plan to issue a cat bond through the iBank, I think has got some promise. I mean, we have to bring the risk down, as everybody agrees, right? So lots of emphasis on helping people learn what they can do to reduce risk, mitigate. And I think, especially with the BRIC grant program being canceled out of DC, the state does need to be creative in finding ways to help, communities provide either matching grants or grants in general, through fire safe councils and all that. Because really, the way things are today for insurers, they're getting, all the data they're getting is scaring them. All the data they're getting has red dots and, and looks like, that's not a good investment, right? So we have to try to get some of those red dots to be, green is part of it.
And along those lines, what, as you're mentioning, the cost factor, I'm just thinking, and I think you touched on it in your opening remarks too, that so many people are basically underinsured. They think they have full coverage. Is it something that I don't know if that's something we got to put in the legislation that you require replacement costs on some of these areas?
Well, the problem there is there hasn't been a lot of mandates coming out of the legislature in the last few years on insurers because insurers have already signaled their discontent with the market. So, and all the previous mandates, that are already there. So I think, the reason that I'm so enthusiastic about the idea of requiring the 50% extended replacement to be offered doesn't mean that the consumer has to buy it, but also because those endorsements tend not to be that expensive. It's, you can argue it both ways, but raising the dwelling limit is gonna bring the premium up more generally than increasing than buying the endorsement and making it larger. But again, you can hear that more from a producer who'll be up after me.
And any thoughts you have on trying to bring some of, like Lloyd's of London, for example, getting some of these folks back into California?
Yeah, I will say, one of the things that does worry me is that there are a lot of players coming into the market that are not admitted insurers, like Lloyd's. We know they have enough money, but there's other players that want to come in that are non-admitted, which means they don't pay into SIGA, they don't have to pay into the FAIR Plan, their rates and forms are not regulated. They are picking up an increasing amount of the market, which makes me nervous as a consumer advocate, because we also watch Florida, and you got to keep an eye on those players because they had a whole bunch of insolvencies down there. We don't want that here, right? So while we appreciate, and I know a lot of producers are grateful that they're able to, like especially captive agents, State Farm, farmers, they wouldn't have any business at all if they couldn't put some of their customers with these surplus lines, non-admitteds. But again, the downside for all of us, you as policymakers, if these entities are not, if they keep taking more and more of the market, and they're not paying into our insolvency fund, and they're not paying into our FAIR Plan, you can do the math, that's not great. So we really do want to keep as many of the admitted insurers doing business here in the state as we possibly can, without bending over too far backwards, and because we do want to make sure consumers stay protected.
Thank you.
Yes, if I could just add on to that, because the CIGA is California Insurance Guarantee Association, so that is, all insurance companies put money into that in the event of an insolvency. And the fire that we had in Paradise, Merced Mutual, a company that had been around for 100 years, went under, but they were an admitted carrier. So you're talking about the difference between non-admitted versus admitted carriers.
So their customers, sorry, I'm sorry.
No, that's fine.
Their customers were able to get up to $500,000 out of this insolvency fund, SIGA.
Right.
But if you're insured with one of these Sage Sure or whatever, you would not have that.
No protection if the company goes down.
Right.
Yeah.
Okay, well, we'll go on now to.
Thank you so much.
Thank you. We'll go on to Professor Kenneth Klein, who is on the line for us here. He is the Lewis and Hermione Brown Professor of Law at California Western School of Law in San Diego. Professor Klein is one of the top national experts on underinsurance for residential homes after a catastrophe. He is a consumer representative to the National Association of Insurance, and he advised hundreds of fire survivors from the Witch Creek Fire, which occurred in San Diego County in 2007, burning 198,000 acres and destroying over 1,000 homes. His extensive research and recent data analysis will provide new facts about California's rampant underinsurance crisis. Professor, thank you for being here.
Thank you, and I anticipated that I was going to do screen share, and of course it immediately failed. So I think at your end, you're in the position to run my slides for me. So hopefully those are going to come up here any second. If not, I'll just soldier on. There we go, perfect. So let's just go to that first slide. So this is a picture of my house in 2003 after the Cedar Fire, and I will simply note that other than the chimney flume, everything you see that is vertical is behind my house. This picture was taken in front of my house at the front driveway. Next slide, please. So as I said, I'm a professor of law. Back in the day when my home burned down, I was a working defense lawyer. By the way, my house was fully and adequately insured. I was able to rebuild, but almost none of my neighbors were adequately insured. And so 5 years later, when I became a law professor, I decided to make that my area of academic study as to why that was. And I've been looking at affordability and adequacy ever since. Okay, if you could move on to the next slide, please. So I had a very strange January this past January. I had been studying underinsurance in particular and how frequent it is and how bad it is and what causes it for over a decade. On January 7, the fire started in LA, and 2 days later, the California Department of Insurance released to me a bunch of data that I could start analyzing on the subject. So I spent most of January simultaneously manipulating data, trying to understand it, trying to see what it could show me, and up in Altadena, trying to work with people who lost their homes. Next slide, please. What I'm hoping to do today is to tell you what the data shows. In other words, what is the frequency of underinsurance, when it happens, how bad is it, what causes it. I wanted to make sure I spoke to the vice chair's concerns about to what extent it's algorithmically driven, and to member Gaines's concerns about demand surge, which we've already heard about a little bit in the questions, and then time permitting answer any other questions. Next slide, please. So 2 caveats. The first is we heard mention of Maui. I'm actually in Maui right now for my 40th wedding anniversary. It's why I'm not there in person, because I do want to have a 41st wedding anniversary. But it does tell you how important this is to me that I'm making time for this. Also, I apologize if I give you either too much information or too little. There's going to be a mix of sophistication in people hearing these remarks. Next slide, please. So let's start with a quick primer on underinsurance. You've heard a good bit about this. Next slide. On an insurance policy. So this is what happens for most of us when we buy insurance. And let's just click through this slide as I go. You first bought an insurance policy because you bought a home or you refied a home. Next click, please. When you renewed the policy annually, you didn't think too much about coverage. And then if you ever shopped insurance, you shopped on premium, not on coverage. Next slide, please. You've never read your policy. Click again. And if you read it, you probably didn't understand it. Click again. So the bottom line is, I have to assume that most of you don't really know the details of your homeowner insurance policy. Basically, you have coverage A. That's the coverage available to rebuild your dwelling. And we've already heard a lot of conversation about RCV policies. I can tell you that I looked at 62,000 fire claims over years 2018 through 21, and 90% of those policies were RCV policies. They do not include fair plan policies, by the way. I only had data on private insurance. Meaning most of California that has home insurance has an RCV policy. Indeed, most of California already has an extended replacement coverage endorsement. Over 90% of the RCV policies I looked at had an ERC endorsement, and in descending order of frequency, it's roughly 1/3, 1/3, 1/3, but the most frequent is 50%, then 25, then 20. Policies in California, RCV policies, also have a 10% coverage by law for changes in building code endorsements. Next slide, please. So the typical conversation, how people buy insurance, is you show a closing binder or a real estate binder describing your home, and you say to an agent, typically your auto insurance agent, because that's the agent you know, I need to insure this. And the insurer asks you a few questions. That's to be compliant with California law about your home. Then they say, here's our estimate to rebuild your home. If you ask if this is enough, you're told, well, there's this ERC endorsement. And that is the full conversation that ever occurs typically about whether the coverage is adequate, which all seems sensible. Everybody's doing their job to the best of their intentions. Next click. And so you never have reason to know that you're underinsured, because most of us we don't lose our homes. Next click, please. Which includes you and judges and regulators. Next click, please. So that brings us to how does all this play out? Next slide, please. Most of us don't lose our homes. Some of us do. Next slide, please. And in Palisades and in Altadena, of course, you know the devastating numbers. So what my research focused on and has been focusing on for a lot of time is how does this happen? How often are people underinsured? On average, when they're short, how short are they, and what causes it? And the DOI set gave me a lot of information. So this is the top line slide, which is when a home is destroyed in a wildfire, what percentage will not have enough insurance to rebuild their home? So if you take insurer-reported incurred loss over 4 years in wildfires, over these 4 years, that was total losses, roughly 9,000, of which roughly 6,000 of them, all coverage included, meaning including the ERC coverage, they were still had less insurance coverage after a wildfire than it took to rebuild their homes, basically 65% of the time. So that should horrify all of us, that 2/3 of wildfire victims over 4 years with RCV coverage, with ERC coverage, were still underinsured. By how bad? Next slide, please. By about 35%, including the ERC. That's across all 4 years. Next slide, please. So the first question, this really goes to the heart of Board Member Gaines's questions about demand surge. It's not a demand surge problem. Demand surge, as it turns out, makes things worse, but it doesn't, it's not the cause. Click, please. First of all, if you looked at claims, fire claims, total losses that were not wildfire, even in policies that were RCV with ERC, almost half of those homes were still underinsured, and by on average over a quarter. So it's not a demand surge problem. Now, let me tell you that I've looked at a lot of data across a lot of years and a lot of places and a lot of events, whether it's fire, flood, hurricane, Florida, Texas, California, 2003, 2025, demand surge runs about 25%. So if this was a demand surge problem, frankly, the fact that we all had ERC endorsements of 20, 25% or 50% would mean we didn't have an underinsurance problem, but we do. Next slide, please. So click right on through. So it turns out that across all of those years, it's also not because we're price sensitive as home buyers. You can isolate in the data the instances where homeowners wanted to be fully and adequately insured, were willing to pay for full and adequate insurance, and thought they had it. And what you can find is that basically 90% of us over those years, 2018 through 2021, thought they were fully and adequately insured and thought they were paying for it and thought they had it. And still, as it turned out, roughly 60% of them were underinsured, and by roughly a third. Next slide, please. So what's going on? It is the reconstruction estimate the insurer gives at point of sale. Please click. 9 out of 10 times, the homeowner simply accepts the estimate as the base amount of their coverage. Click, please. And there is warning language in the policy that says it's just an estimate. But there is good empirical work that, in fact, nobody reads that language. And if they did, they still would not understand it. Next click, please. So ultimately, though, the algorithm, and the data allows me to isolate what the number is that the algorithm is producing as an estimate of adequate coverage to reconstruct a home. That estimate was low about 95% of the time, and by on average, about half. That's kind of a horrifying number, I would assume, to everyone who is hearing this presentation. Next slide, please. So why would that be? why would the estimate be persistently low? That seems to not work in the way that markets work as we understand them. Why would it have that kind of error rate? Well, let's talk about that. Next slide, please. So the explanation starts at what happens at the end, what happens after a home is destroyed. So please click for me. So what happens is that claim is going to be adjusted, meaning that there's going to be a negotiation between a policyholder, typically represented by their contractor helping inform them, and an insurance company about how much money is owed to rebuild the destroyed home. So the insurance company prepares for that negotiation by providing a specialized large claim adjuster who's very sophisticated, using a big data algorithm and a lot of data to generate a position for the insurance company. Click, please, for me. Thank you. And that adjuster, who is highly trained, spends a lot of time and a lot of detail to prepare a hypothetical complete reconstruction estimate as an opening position in a negotiation with typically a building contractor on the other side of that negotiation. Next slide, please. So this is the product that is typically done, that is the industry standard to prepare this bid, is called an exactimate. It depends on a lot of time, sophistication, and detail by the adjuster. And the exactimate and user license agreement tells you exactly what it is. It's intended to represent a baseline or place to begin creation of an estimate. In other words, it's assuming a negotiation on the other side. So it's intentionally coming in low, assuming that it will be negotiated up in the run of claims adjusting. Next slide, please. So, but when you buy insurance, that's not what's happening at all. What's happening is you have two people, a policyholder and an agent, neither of whom has sophistication, time, or detail about construction. And because of that, they don't have the ability to do this negotiation, and there isn't going to be a negotiation because their interests are aligned, which is full insurance at the lowest possible premium as a way to sell the policy. And so the exactimate data is incorporated through a series of shortcuts that now boil down to about 15 questions in California. And it's input, and it generates a number, and that estimate is applying essentially an adjusting cost containment tool into a front-end coverage tool, and big shocker, it comes in far lower than reality. Next slide, please. Now, let me simply note that all of the statistics I've put in front of you about the frequency of underinsurance and the average depth, that is looking at claims data that are losses that occurred after the California regulations making these estimates more robust. In other words, that's how they're shooting, how low they're shooting after those adjustments are made. So where did we start? We started by asking the question, what is the frequency, average depth, and causes of underinsurance? My research predicts that among the people hearing my remarks today, if you own a home and have insurance, at least half of you or more wanted full and adequate insurance, were willing to pay for it, think you have it, you do not have it, and you are short by a lot. Vice Chair Lieber's concerns about algorithmically driven underinsurance, my research finds that these algorithms are the heart of the problem. They calculate low almost every time. And I do have a parenthetical note that's worth paying attention to, which is I believe the Department of Insurance is going to release to me 22 and 23 data in the next week or two. And so stay tuned to this space because I'll be updating my numbers. Board member Gaines's call to learn more about 360 value and demand surge. I hope I've adequately addressed that. I know I've been speaking quickly. The bottom line is wildfire, flood, hurricane, demand surge, they all amplify the problem, but they do not cause the problem. Next slide, please. So some starting points to think about when considering what can be done about this. The first is, and you've already heard comment on this in your questions and answers, affordability and adequacy are always in tension because fundamentally an a adequacy problem. An underinsurance problem is inadequate coverage. You increase coverage, you increase the premium attributed to coverage. That's just the way the math works. Private insurance companies are for-profit businesses. They cannot profitably compete charging a premium that is not actuarially sound. And so if you do not allow them to charge for the risk you're requiring to cover, they'll simply stop writing the risk in California. They'll pull out. That is a political problem that I'm glad it is not my responsibility to solve. But that is the reality that you have to grapple with. I will tell you that resiliency can help, but it is not a magic bullet. And I want you just to think back for a moment at any picture you've seen post-fire of a lot in Palisades or Altadena or Santa Rosa, or the one that was the first slide in this presentation. The house is gone and the trees are still up. Home hardening can decrease the likelihood that your home will burn to the ground, but it is not a magic bullet. So, next slide, please. A menu of broad theoretical approaches to reducing underinsurance. I'm not good on the details of writing legislation. It is not my core competency. But I think if you, at a minimum, insurers should have public-facing, insurer-specific information about their error rates. You know, I am insurance company X. Last year, when I wrote homes in your neighborhood or in your city, my algorithm shot low X% of the time by Y frequency. I think transparency will help in creating market incentives to correct for error. I also think there are ways you could consider requiring adequacy. A passive option would simply be you reflect your error rates, you disclose them in a way that is clear, and you give an insurer a choice whether they want to buy at a higher premium correcting. An active option would be some sort of regulation that simply said, calculate an estimate of adequate coverage however you want, but if you're wrong by a defined error rate, 5%, 10%, your policy is treated as reformed to be guaranteed replacement coverage. Fundamentally, though, I think what you have to do is you have to realign risk and responsibility. The reality is homeowners don't know what it costs to rebuild their home, and they aren't generating the number. Whoever generates the number should bear responsibility for error if the number is wrong. So we should no longer have insurance contracts that say, this is our number. If you think it's inadequate, ask us. But if it's wrong, that's on you. And finally, one thing you might consider is really aggressive risk spreading. So, for example, if the entire state of California was a single risk pool, this is an equivalent to the community pricing tool in the Affordable Care Act, then in most of LA, everybody's insurance would go up a tiny little bit. But in Paradise, your insurance would go down a whole lot. And that would make things, that is another way you could address at least the affordability side. Next slide, please. So there's a whole lot of information and I talked way too fast, but I can tell you at this hot link, what I have said is all public facing as a much longer and detailed presentation of an academic paper that is forthcoming. As soon as we are done with the question and answer sessions, I am going to convince my wife that I haven't ruined our anniversary trip. So I'm not going to be available by telephone for several days or by text, but I am going to be available by email, and this is where you can find me. And with that, I'm happy to answer any questions you have.
Well, thank you very much, Professor. Members, any questions for Professor Klein? Mr. Vasquez.
Thank you for your presentation, and I have a couple of questions. One of them, I'll start with the California Fair Plan, and I think you kind of touched on it a little bit. You know, the rates are high and less uninsured are able to purchase, and I'm just wondering, especially for the low-income folks, what can we do that are struggling with these premiums?
Yes, sir. So first, let me tell you that the reason my data does not include the FAIR plan is because the same law that allowed the California Department of Insurance to collect this data prohibited them from collecting and disaggregating data on the FAIR plan. So I have limited insight on what's going on within the FAIR plan. But at the end of the day, the reality is that the more expensive insurance is, the more it presses on the people who do not have great wealth in being able to afford a home or keep a home. And a home, of course, is one of the best tools we have in closing the wealth gap in our communities because it allows us to build generational wealth. So it's a huge problem. But I don't think it's a problem that you can solve by regulating insurers. I think it's a problem. It's a public policy question of what value do you place on home ownership? And if, as a governmental entity, you place a high value on it, then you have to address insurance premium costs, assuming it is actuarially soundly written insurance premiums, by subsidies or vouchers or some other price support, so that we can have this ladder of wealth growth across demographics. But if you require an insurer to write a risk and don't let them charge actuarially sound premiums to cover that risk, they're just going to not write the risk in this state.
And my last question is, how would you respond to someone who argues that it is and should be ultimately the responsibility of the insured individual to make the selection as to their policy?
Well, what I would tell you is that's essentially what we do now. And what happens is, and you can think about it if you own a home, how you bought your own insurance. I've had this conversation with someone who was an economist at the Federal Reserve Bank in Philadelphia. And I said, how did you buy your insurance? He said, I went to my insurance agent and I said, give me a number. And I assumed that number was right. If you read your policy would say, every policy in California says, if you're worried about this being enough, ask your agent. And if you ask your agent, what are they going to tell you? They're going to tell you, this is what our tool told us. You also have ERC. You should be good. So that's all well and good. But everything we know is that people do want to buy enough. They think they have bought enough. They've done exactly what their policy has told them to do. They've had a conversation with the agent to make sure. And they only learn that they're wrong after they've lost everything. So, I'm all for personal responsibility, but at some point you have to be cognizant of reality and how this is playing out in real world, boots on the ground.
Thank you.
Okay. Mr. Gaines.
Yeah, thank you, Professor Klein. I appreciate your presentation. And it was suggested earlier about potentially looking at a extended replacement cost endorsement at 50% versus offering these lower levels of extended replacement coverage. Of course, that would have to be coupled with, accurate replacement costs of the home itself. And I know that insurance companies often will have their costimator, but even that has to be used in the right way in terms of the style of construction as to whether it's a production home or a custom home. But do you think this is one of the elements in terms of the extended replacement cost endorsement and increasing that to 50%?
I think that if ERC was required to be 50%, that would go a long way. In fact, Colorado has just passed a law that does that. And so it'll be real interesting over the next 2-3 years, when inevitably Colorado is going to have another fire, just as California will, to see how that works. What my data would predict is that a 50% ERC should, on average, solve the problem of the algorithms that are being used, which on average are shooting 50% low. Then your lagging problem will be the instances where you have a 25% demand surge. But frankly, if we have cut by 2/3 the average amount of underinsurance when it happens, that's not nothing, right?
Sure.
So if you wanted to cover the whole thing, I'd make it 75%. But 50% is a real good step in the right direction.
Great, wonderful, thank you, appreciate it.
Yep.
Mr. Schaefer and then Mr. Emron.
Thank you. Professor, I'm your representative for San Diego, as I guess you know. I wonder, are you related to the famous Herb Klein who came out of San Diego?
I am not related to any client in San Diego that I'm not married to.
I've enjoyed your presentation very much today. I've gotten to be 87 years of age without knowing the word algorithms, which I see as a set of rules to be followed in calculations. You've used it 20 or 30 times today, and that's been quite an education for me. It's harder for me to get real serious about your presentation when I'm looking at sailboats and swimming pools in the background. You make us all envious. In your introduction, you didn't tell us that you do a lot of pro bono work, which I appreciate, and that you're the top 10 students, 10% of your law school class. You bring a lot to what you do, and I'm impressed with your work. And of all the presentations we've had in my 6 years, yours is the most friendliest, folksiest, the only one that's mentioned some of the board members here, so it gets our rapt attention. I've been concerned myself about the underinsurance problem. When I've had property, insurance has been expensive. I haven't even bought insurance. I'm a gambler and I just take that risk, but most all property today has a mortgage on it, and of course the lenders require insurance. And the cost of insurance is very high, and it's not getting any cheaper. And you point out the unknowns, and when it's not really an equal negotiation between the adjuster and the insurance company and the homeowner, that there has to be somebody concerned about the looking out for the homeowner, and you talked to that today, and I appreciate that. And I'm going to be more vigilant in my concern for the insurance industry because of your talk today. Thank you.
Well, thank you. I appreciate it, and I would hope that my San Diego representative does have a comfort level with pictures of sailboats and palm trees.
Thank you. Mr. Emron.
Thank you, Vice Chair Lieber. I want to echo my colleague, Member Schaefer's comments as well. Thank you for presenting to us today. So would it be wise for a homeowner to get a licensed contractor to assess the cost of rebuilding?
You'll hear from Matt Everson later today, as I understand it, and he'll talk to you about that. But I will tell you, it would be wise, but it's probably not practical, because what you're trying to do is you're getting a contractor to write you a construction build for a project that they will not, in an ideal world, ever be building. And so they're going to charge you a handful of thousands of dollars in all likelihood to do that for an insurance premium that may in itself actually be less. And so I think it is unlikely to happen. My other concern is, frankly, and again, I just ask us all to hearken back to when we bought insurance for our own home. And the reason we did it, frankly, is because it was a box that we had to check to close escrow. And so there's just simply not a lot of attention paid to adequate coverage, even in California, when we first buy home insurance. And then unless we get a renewal notice that really cranks up our premium all of a sudden, we don't think about it again ever until after we've had a loss. The reality also is that if we ask an agent, because they don't know themselves that the algorithms they are being given are inaccurate, do I have enough coverage? Their own experience as an agent will tell you yes, because they have no reason to doubt that. And if they're worried about it, they'll tell you you have ERC, And so it's just, yes, in theory, that would be useful, but everything I know about how insurance is bought and sold and how this actually works is it's just never going to happen.
So how about those that have an umbrella policy? Does that help?
An umbrella policy, to my understanding, Amy Bach will know this way better than I do, addresses liability, not indemnity. And I know I have probably just wandered further into language that most of us don't use in our ordinary conversations, but the short answer is, to my understanding, no.
And my very, very last question, I want to zoom out and look at places like Florida. We would deal with wildfires here, and Florida deals with hurricanes. And the state of
Yep.
Florida and insurance companies have come to some agreements that allow insurance companies to use probabilistic models to set rates. They created a two taxpayer-supported reinsurance program for insurers. They limited the ability of third parties to sue insurers. They've also allowed insurers to include reinsurance costs in their rates and establish what is referred to as a hurricane tax, meaning that Florida policyholders, not the insurers, are on the hook if the Florida Fair Plan payouts exceed its reserves. Do you think that's a success story or no, and why?
So let's talk about Florida briefly and hurricane. We are assuming, the import of your question is, well, here's the problem. With hurricane, you have to decide, is the damage wind or is it water? Because if it's wind, it's covered by your home insurance policy. And if it is rising water, it's covered by the flood insurance policy, which is the NFIP. And that's a big problem in and of itself because NFIP insurance maxes out at $250,000, and the average construction cost of a home in Florida, big surprise, is north of $250,000. So all of the things you reference don't really matter to helping anyone in Florida who's suffered a hurricane loss if it is going to have to be responded to by flood insurance. Now, Florida has very aggressively tried to address its problems with a whole suite of legislation that you have just summarized. But the long and short of it is that the book is very much out on the effectiveness of that litigation, very much out. And I frankly think that that is very unlikely to be truly effective in having adequate and affordable coverage. And from that, I draw the conclusion that there is nothing political or philosophical going on here, that indeed there could not be places more diametrically different in their attitudes, both their politics and their attitudes toward insurance, than Florida and California. And we have experienced the exact same problems with insurers pulling out, with coverage being inadequate, with premiums spiking. And it's because it doesn't track back to the politics of the thing. And then the last comment I want to make in response to your question, and it's a very good question, is one of the things that Florida has been sentinel in is trying to do litigation reform. And as a former defense attorney, I am not positionally resistant to the notion of litigation reform. But the reality is that anything that makes lawsuits harder to file and harder to win affects all people who are underinsured or uninsured. In other words, yes, it will make it harder to bring frivolous claims. It will also make it harder to bring merited claims. And so you better be sure before you do litigation reform or even consider it, that you have a way to make sure that you aren't doing more harm than good.
Understood. Thank you, Professor.
Okay, well, seeing no further questions, thank you so much for being here today, Professor. We wish that we could send you a couple Mai Tais to make up for the time, but we.
Oh, don't you worry. I will not be coherent 2 hours from now.
Well, fantastic. As long as you're coherent when we want to tap back into you for next year's legislative season, we really appreciate all your help. Thank you so much.
Take care. Be safe out there.
Thanks. Bye. And now we'll go to David Schaefer, who is Vice President of Heffernan Brignoli Insurance Services in Oakland and Walnut Creek. More than a 36-year career in the insurance industry. He was 46 years, okay. He was an early advocate and promoter of United policyholders. And Mr. Schaefer has experience testifying on behalf of professional trade associations, independent agents, and brokers of California on legislation for home and earthquake insurance before both houses of the state legislature. He is also an associate of risk management and is a chartered private risk and insurance advisor. We very much appreciate you being here today.
Madam Chair, members of the Board of Equalization, thank you very much for having me come here today. I'm really excited to be here because with all the problems we have with underinsurance going back to 1991 when Amy and I met each other actually before the fire to talk about these issues, it's puzzling to me why 24 years after, actually it's 91 plus 25 is 34 years after Oakland's firestorm, we're still having conversations about underinsurance. It's shocking and puzzling. And so I actually think I have some great ideas to share with you today to solve this problem once and for all from my unique perspective, from my being right in the midst of the battle, trying to help homeowners purchase adequate coverage. And I want to allude to a quote that you gave, Sally, to this great reporting of Megan and Susie at the San Francisco Chronicle. They've done a fabulous job in the reporting to address this issue. Really, it's just incredible. And your quote was, underinsurance is a silent threat. And for some reason that resonated with me. And the reason why that resonated with me is because a number of years ago, approximately 15 years ago, I was in my eye doctor's office. And occasionally the doctor will say, we're going to put some drops in your eye and take your eye pressure. And I never really knew what that was about. But anyway, okay, doctor, let's do that. And when you leave, you can't see where you're going, because your eyes are all dilated. And so after you have to wait until your eyes are numbed, and then he comes back and uses what's called the gold standard, the golden denominator to take your eye pressure. And then he kind of steps back and says, David, we need to have a talk. I said, why? Because you have abnormally high eye pressure. And I said, well, I don't feel any pain. What's the significance of having eye pressure? He says, because if you don't treat it, now that we have noticed you have this, it's called a glaucoma, which I have, a certain type of glaucoma. He said, it's known as the silent thief of sight. And the analogy I want to make here at the beginning of my presentation is that underinsurance is the silent thief of irreparable financial harm. And because with glaucoma, why it's called a silent thief is because after it's done its damage, there's no pain. By the way, someone who has eye pressure, usually you don't feel any pain. And people don't feel any pain from being underinsured until it's too late. And so, David, the good news is, I said, by the way, doctor, you know what I do for a living is I sell insurance policies. And if I lose my vision, I'm going to have a hard time reading these policies. So we better do something about it because I need to be able to read the policies that I help my clients buy to protect their assets and have adequate coverage. So he said, the good news is, David, there's a way we can treat it. And if you follow a treatment plan, I can almost guarantee you that you'll never lose your sight. I said, glad to hear that. Okay, so the same thing with underinsurance. If you can identify someone has this unrecognized pain, the financial pain, because you don't feel it until, as Amy's great organization has this, and all the studies that Ken Klein, it's financially painful when you find out you're underinsured. And just like my eyesight can be saved, I can never have that pain of losing my sight, underinsurance can be solved if you can identify it and know how to treat that condition, right? So that's how I want to start. I think it's very important. Number two is, as I thought about this big picture, and I say it's kind of puzzling that over 34 years we've been talking about underinsurance. No one has come up with a solution. And isn't it the goal of this committee to have a solution, right? We all agree, if we could find a solution, wouldn't that be fantastic? I agree, yes, it would, right? Does anybody disagree with that? All right, so imagine this. You have a box of 1,000 pieces of a puzzle, but most puzzles have on the cover a picture of what it's supposed to look like when you put it all together. The puzzle of underinsurance is like a box with 1,000 pieces, but you don't have on the cover what it's supposed to look like when you put it together. And the point I want to make at the beginning of my presentation is working together, putting the different complexities of this problem, what I vision in terms of the solution, even though we may not know how we're going to go from today to there, but the vision is when you put all these pieces of the puzzle together, it's going to have pictures of all of us smiling. And there's going to be on the top, we'll have the insurance commissioner in there, the governor, you guys, me, Amy, and Matt, and Ken, who's over having a great time in Hawaii. It'll have on the top, with our smiling faces, underinsurance solved. So that's the vision I have, that we're going to solve this problem, even though the complex puzzles of this situation, we don't know how we're going to assemble it, but I have some ideas that I'm going to share with you right now that get to that vision fulfilled. Do you agree that's a good idea?
Yeah.
Okay. So my proposal, my talk today is reforming home insurance in California, a solution to underinsurance, a proposal for uniform standard dwelling replacement cost estimate. Next slide, please. So what's the problem? We've heard a lot about the problem, so I don't have to go into great detail here. Great studies, and I've read a lot of Ken's material. And I like learning. I'm a student of insurance. He's written great studies about insurance. The reporters, Megan and Susie behind me, have written fabulous stories about how this manifests itself in the marketplace. Amy Bach, who I've known before 1991's Oakland firestorm, and she's done a fabulous job. I never would have imagined before she and I met what an incredible resource she has been to consumers. So Amy, compliments to you for all the great work you have done. Okay. So we've studied this inside and out. So all right, there's no question to go into all those details. We have studies that show that we have a problem. The big factor, according to this wonderful woman sitting next to me, Amy, is the calculations done at the point of purchase of coverage. We know from all the studies Ken's done and others that one of the biggest factors is you want to use the word algorithms, and I think there's more to it just than the algorithms, that the prominent provider of the software to the insurance industry, 360, is proven to be inaccurate, okay? Next is, homeowners really want to know, do I have adequate coverage? David, you're the agent. Aren't you going to help me get adequate coverage? And let's talk about that just for a moment. The law is that as an insurance agent, I have no legal obligation to pick the number. The law is that the insurance industry has no legal obligation to pick the number. The law is that the homeowner is the only one responsible for picking that number, and the problem is they don't know what that adequate number is. So how do we help the homeowners pick the adequate number? And I'm going to be just addressing that, and that's why I asked Matt to come here today to get to this issue of what's an adequate number. So, and then who do we trust to give us that number? All right, next slide, please. So there's other causes of underinsurance than just the ones that we just looked at. They are how insurance is marketed. Buy the lowest premium, we can save you money. That's not, I've never approached selling it, trying to compete against price. My dad of blessed memory said, David, when I got started in this industry, if you always focus on price and you're at the time of loss, your clients have not adequate insurance, they'll never remember how much money they saved. So they're only going to remember they don't have enough insurance. So my dad was a life insurance agent for New York Life. So he said, David, the best advice I can give you is focus on coverage, adequate coverage. That was great advice from my father. So the insurance industry is marketing on price, sell the price, not sell the coverage, this adequate coverage. The insurance code, and Amy, as you mentioned, came over to my office to look at all these algorithms, well, then we call them replacement cost estimators. And I believe as a result of our conversations, the former Commissioner Steve Poizner put out developed standards of estimates of replacement value. But these standards are what I would call very low standards and not uniform. What does it mean not uniform? Is, for example, Matt's company recently gave me, he's a great resource for one of my clients in the La Miranda area of California, an estimate to rebuild the house of about $4.4 million. The insurance company that I struggled to find an insurance company, because this is the worst market for home insurance in my 6 years in this industry we've ever had. They actually came out to the house, probably using, I don't know this for a fact, either 360 Value or some competitor's product. And they said, David, the house can be rebuilt for $2.7 million. And I have the spreadsheet, I'll give copies if you want afterwards, or send it via email. The difference in of coverage adequacy was 1.7 million or 1.6 million approximately. So did I overinsure that house? Or is that house underinsured? What's the right number? Do I have adequate coverage? If the homeowner is responsible for picking the right number, how do they know what the right number is? Who do you trust to give you the right number? One more quick example, a house in Piedmont. One of my clients, for a very modest fee, again, Matt's company provided a rebuild estimate of about $2.5 million. The same insurance company that I just mentioned came out to the house and said, this house only needs to be insured for $1.5 million using the algorithms or whatever they're using. Obviously flawed data, I believe, and the difference is about $1 million. So how does that homeowner who is responsible for picking the number know who's given them the right number? Is that house now overinsured by $1 million or underinsured? And in the marketplace today, what the insurance industry allows to happen with these flawed standards, because there's no uniform standard that requires accurate data. And when I read through this, I mean, these standards don't even talk about the building code issue, which I'm going to address. These standards say all we're required to provide is a minimum level of coverage. Nowhere in this regulation does it say we have to give you an adequate amount of coverage. And we're all here about answering the question, what is an adequate amount of coverage? There's no uniform standards that are high enough, because when I have my eyes examined, the tonometer is the gold standard. No one argues with that number when they tell you what your eye pressure is. It's been around since 1948. Nothing's been invented that's better than that. So we need to have a gold standard of determining what an adequate coverage is. And consumers who are responsible for picking the right number don't know and unknowingly make wrong decisions, no fault of theirs. And at many meetings I've attended with Amy, or that she's held, and recently in Orinda, the biggest question is, what's the right number? How do we get to a right number that's adequate? Next slide, please. And what are the real world consequences to this? Well, those wildfire victims who are dramatically underinsured have devastating financial consequences. We all know that, right? The communities that are impacted by underinsurance, the homes are unable to be built because the homeowners don't have enough money. And you understand from a tax perspective what the consequences are if you lose revenue, because I understand that after these major catastrophes, many homes are never rebuilt because no one had enough money, right? Is that true or not? Yes? Okay. And there could be legal battles over, well, how come I'm underinsured? You know, I'm told by my professional liability company, David, if someone says, put in writing, Amy will, I think she'll verify this, ask your agent to put in writing, this is enough adequate amount of insurance. My professional liability carrier says, David, if you put in writing that you think that's an adequate amount of coverage, you assert to that, the house burns down, it's not enough, you, David Schaefer, can be held legally liable And so as your underwriter of your professional liability insurance, we don't want you to put anything in writing that asserts that's adequate coverage. And all the homeowners want is adequate coverage, right? I mean, it's crazy. It's a crazy system we have, and as Megan and Susie alluded to, the system is broken. We are here to fix it, and I hope that my ideas will get us to that endpoint. Trusted insurance companies, the whole industry that I'm proud to represent as a licensed agent here in California, goes way, way down. I won't even share with you the things I hear about in the insurance industry when I talk to potential clients or existing clients. And finally here, my point is the community recovery time is greatly delayed because of inadequate insurance. Next slide, please. What's the solution? All right, I'm gonna make share some bold ideas with you today, because I know there's gonna be opposition to what I'm going to talk about. And I'm okay with that, because at least people are willing to talk with me and Amy and Matt and all of you about what's good or bad, working together, collaboratively. Hopefully we're going to get to a solution. So number one, this is one of the boldest things, is eliminate insurance companies, insurance agents like me having to pick the number. That's a crazy, you think, oh my God, they should know what your house costs to be insured, but we know now since 1991 to 2025, if they know, they're not telling us. Why? There's got to be a reason why they're not giving us an adequate number. And I think there's a bias in the insurance industry, the mass marketers of insurance, to keep the dwelling limits low, because when you keep the dwelling limits low, you keep the premiums low. When you do that, you sell more policies. And I have to compete against that in the marketplace, because David, the agent that I talked to after you told me this is how much I need, they said I need less coverage. So who do you buy the policy from? Who do you trust? So eliminate the insurance industry from doing this. Eliminate me from doing this. If the homeowner's responsible for picking the number, but they don't know how to do that, help them pick an adequate number. So that's number one. And that's a very controversial thing, I'm sure, for everybody when they hear this, but I'm okay with that. But I think it makes sense from all my experience. We can't just go back to the insurance companies and give us the right number. I don't know if we can trust them to do that. They may have financial incentives not to do that. For whatever that reason is, it can be discussed on a different time. Number two is to create a uniform standard of dwelling replacement cost estimate. So instead of having these wide variations in the marketplace from 500,000, $1 million, it can be 300,000. It's just amazing how much variation there is in the market for people who really want to have adequate insurance to figure out how do I make a financial decision when no one's telling me what the right number is. I don't know how to pick the right number, and that's all I want is the right number that's adequate. So if we have a uniform standard that everyone has to follow, then that number that they're going to begin with should be all about the same. It shouldn't be this wide variation, these wide gaps in cost to rebuild they should go away. Right? How do we do that? We begin by repealing this code, and replace it with better crafted legislation that gives us a much higher standard, more uniform standard of replacement cost estimates than exist in the code today. And there's a lot of flaws in this, which I can tell you more about later. From my perspective, it doesn't, for example, address the building code issue. There's nothing in here that says, by the way, make sure that you account for building code changes. Not a single word about that anywhere. Like I said, let me go read over. No, not a single mention of building codes. That's a very important coverage to have. How is this going to come about? Until Silicon Valley can invent a robot that can be delivered in a driverless vehicle, for example, to go to your house and inspect it in person, we're never going to get to an accurate number. The thought that we can not see the actual house to figure out what the cost to rebuild will be is a flawed assumption. You have to inspect the property. That means you got to pay someone to go out there. Like I think one of our members here asked, why don't you get a contractor to go out there and give an estimate? They don't have any time for that. But if we have a separate qualified group of individuals that can go and visit every home, and there's like millions of homes in California, that can gather the appropriate data that someone like Matt knows is crucial to put together to come up with this estimate, you have to get people who are trained professionally and educated to go capture that information, because garbage in, garbage out, the algorithms, whatever 360 value and others are using, it's bad data. The numbers are coming up woefully low. So you got to have people who are going to, then of course is, who's going to pay for that? What will it cost a homeowner to get someone to come out to their house to do this data gathering? I don't know the answer to that, but we need to have an affordable solution, because I think the homeowner needs to take ownership of insuring their home to value. I don't know that number. I'm not legally obligated to know that number. The insurance company doesn't have to give that number. If the homeowner is responsible, this helps them get to an adequate number to find out by an unbiased, independent person who knows how to estimate that. And as I said, using accurate underlying pricing data. Next slide, please. The benefits of this having a uniform standard, it's unbiased. Right now, as I said, I think there's a bias in how these estimators are used to sell more policies. Keep the dwelling limits low, keep the premiums low. As a result, sell more policies, all right? But that doesn't work. That's part of the broken system. So this will be an unbiased, and then if nobody can argue with that and everyone uses that number, it'll make a huge difference. Number two, it's going to set a minimum adequate coverage amount before you buy your policy or when you renew your policy. We have a gold standard of estimating that's going to obviously raise what most people have their homes insured for today. It's going to be the new minimum adequate coverage level. And insurance companies should love that, because the premise of insurance adequacy when you make rates is insurance to value. And Mr. Gaines, you should know that as an insurance agent. I'm sure you've heard about insurance to value in all the years you've been in the insurance industry. Insurance to value is how insurance companies capture enough premium to pay for those claims down the road. So they should love this idea. And at the time of purchase, then people are going to have adequate coverage. Next slide, please. Market competition. Now imagine this. Right now, people are getting this wide gap in coverage amounts that's adequate. And who do you trust? Now, you take this, this is a BW Builder sample of a replacement cost estimate. Let's call this the gold standard for now. This is the gold standard of replacement cost estimate. And you get, but just for our conversation, right? Now, this is an irrefutable, unbiased estimate. It's certified, you paid for it. You give this to David Schaefer, a potential agent. You give it to a AAA agent, a State Farm, whatever agent you, and every agent who's going to bid for your business starts with the same minimum amount that's supposedly adequate, okay? So then the competition is, well, now that it's a level playing field, you compete on, well, when you raise your deductible, you save money. Well, how much can you save with one company over another? If you insure your cars with the same insurance company, bundling the home and auto, how much can you save? This extended replacement cost coverage, maybe, I think, and I'll get to that, it was maybe the 50% that Colorado recently enacted is okay. But again, if the minimum has to be raised anyway to begin with, if you're already underinsured, that 50% may not be enough. And mostly at the end, superior claim service. So market competition will change when we're all competing with the same dwelling limit to begin with. Next slide, please. Now, we already went into extended replacement cost, and when the premise is over, you're going to get this extra bump at 50%. You should start with insurance to value that's more adequate. And one of the things I want to remind everybody is it's just an estimate. It's impossible, maybe Matt will be able to tell this more eloquently than I, it's impossible to be exact. Like, who would have known we're going to have tariffs potentially impacting the cost of lumber and materials this year? How am I as an agent I'm supposed to be an expert and have predicted that the leader of our country was going to impose tariffs causing the cost of materials from Canada to increase the cost of construction? So if you already are starting at a more adequate number of coverage, which we should all start at, I love the extended replacement cost endorsement because it accounts for the fact, and we all have to understand this as educated consumers, that this number is never, I can't ever say it's exact because after the date of purchase, that number is likely and will change, and this gives you a cushion of error for that. So, but you want that extra coverage, you have to agree to begin the process at this number. Next slide, please. Ongoing accuracy. So it's constantly, I use this expression to my potential new clients asking the question, what's adequate? I said, even if I pick a number, it's a moving dollar target because it can never be precise because 6 months from now, with tariffs, it could be changed, all right? So let's assume we're all lucky and none of those tariffs ever go into effect. One day they will, one day they won't, who knows? But if nothing's changed at all and you haven't done anything to your house to upgrade it, you get back in touch with the person who gave you this estimate and say, do we need to do any updates? I mean, because of inflation, labor changes, this normal stuff, should we increase this limit of coverage? They said that was adequate. I remind all my clients that before you start renovations, contact me because there's limitations in the policy to say that if you don't contact us as your insurance company and increase your coverage by, if you add onto your house, like for example, a $500,000 room addition, you don't report it, then your house burns down, it won't be covered. So you need to inform consumers, homeowners, that for this to stay accurate, you need to report renovations and adjust this estimate to reflect that. So people need to have these limits adjusted annually, it could be maybe 2 years, whatever that number is, we'll figure that out, part of this puzzle. Next slide, please. Building coverage reform. Well, I wrote an article that I emailed to Doug Winslow, thank you, Doug, wherever you are, about an article I wrote in 1991, in May 1991. I realized as a student of insurance, when I read an article in the Chronicle, believe it or not, I don't think Megan and Susie were around back in 91 being journalists, but the article was about a homeowner with State Farm Insurance who might have had the guaranteed replacement cost clause, had some serious fire damage, and the State Farm refused to pay the full coverage amount. And the article said he sued State Farm. It went to the California Supreme Court, and this is true, you can look it up. The homeowner lost the case. Why? The judge said, read your policy. And the policy says there's an exclusion for building codes. So no coverage for that. But he said, I thought I had a guaranteed replacement cost policy. And just one more quick comment. I bought a book with me today called Delay, Deny, and Defend by Jay Kleiman. And we're supposed to read policies, right? It's your responsibility to read the policy. I want you to all order this book and go to the chapter of homeowners insurance. Professor Feynman wrote a great chapter here. He's a professor of insurance, and he's a lawyer. He said, David, he didn't say to me, but in his chapter he said, this is one of the most complicated legal contracts I've ever read, and I have a hard time understanding it. So if Jay Kleiman, a professor of insurance law, can't understand what his own homeowner's policy is telling him what he's covered and not covered for, how can the consumer know what their policy covers? And from that incident, that story in the Chronicle in 1991, I went back and read the policies. I was a young producer, I didn't know everything. And I'm like, oh my gosh, I have a lot of clients who don't have this building code coverage on their policy. I went back to every client, took a lot of time and effort. I had to compose a letter. I told them why it's important. It's only going to cost $5 extra per month. Every single person, every one of my clients said, David, thank you so much for notifying me to get this important coverage. Not a single person turned me down. But the problem is, if these replacement costs, the standard that we have, which is not a very good standard, doesn't even cover building code coverage properly, we have a problem. The problem is the policies today have exclusions or this 10% cap that was mandated. The companies today by law have to offer at least 10%. It's in the insurance code. That may not be enough. It's a limit. Let's get rid of that. Let's repeal that insurance regulation, or if it's in the law, repeal it and make sure every policy in the state of California covers any issue to rebuild your house to code or any issue that involves what's called an ordinance, where you may have to tear down the undamaged portion of your house, because sometimes if you have enough damage, doesn't happen very often, the insurance company is not obligated to pay for the undamaged part of your house, but you still have to tear it down. So just eliminate that. And make sure every policy covers building to code, dealing with the ordinances. How do you price for that? Let the insurance companies figure that out. But allow them to price for those.
It's waiting, so we got to
Okay.
speed it up a
Okay,
little bit,
all right.
but we appreciate
Okay,
it.
I'm almost done. All right. Flexible personal property coverage. Right now, when you buy a policy in California, basically you're forced into taking a percentage of the dwelling limit as personal property coverage. Example, house is insured for $1 million, you may get, let's say, 70% built in, $700,000 for your contents. It says in your policy, when you make a claim for the house just burned down in LA, if you didn't have $700,000 on that policy in your house, you're never going to collect it, because you only can get paid for what you can document. So, but you're forced to buy the coverage. You paid for $700,000 of coverage, but the insurance industry knows you may never get paid for. And you can't even, I asked my clients, do you need this much coverage? I can't change it, but if you could, how much would you need? And they said, David, it'd be really nice if we can bring it down to what would be more appropriate, so I don't have to pay for coverage I can never collect on. So that needs to be part of the conversation. Next slide, please. Long-term benefits. My proposal, we're going to have adequate coverage, which will have all those built-in features to give you that bump. It'll be for the Board of Equalization. Once you feel better, if you could have the communities rebuild faster because they have adequate coverage from the very beginning after the disaster, wouldn't that make a difference? Would you agree? Okay. And so faster claim service, less litigation, if any, which the legal profession may or may not like because they can't litigate these things. And why even have litigation? You should never have to litigate this. And at the worst possible time, long-term benefit, the homeowner should feel these reforms that I propose, which are bold reforms, they should give them the peace of mind that you want when you buy insurance. Next slide, please. Support for the reform should come from the insurance industry. You may oppose them. That's okay. Let's talk about, where's the insurance industry here today? Besides me as an agent, I'm just kind of surprised. I'm the only one from the insurance industry. Where's Mr. Fraser? I thought was supposed to come here. I don't know why he's not, but the representative didn't show up to talk about these solutions. But I hope the insurance industry will buy into this proposal. Agents will buy into this proposal, and the homeowners themselves. It'll simplify buying the insurance in the marketplace if we all have a uniform standard of value before the policy is purchased. And I believe this reform that I'm proposing aligns with the interests of all the stakeholders, the Board of Equalization, the California Legislature, the California Department of Insurance, insurers, contractors, and the homeowners. Next slide, please. So here's my call to action. I'm asking you as the Board of Equalization to create a working group to take these ideas and really have some robust conversation about them, to talk about these issues of extended replacement costs, building code coverage, personal property limits, and figure out if we even need to propose legislation. Matt shared with me before we began today, maybe a solution is just changing some policies. I don't know, not insurance policies, but they should be changed too. But within the way the legal system, our California system works, whoever sets standards, maybe we don't have to legislate. We maybe only have to legislate if the insurance industry opposes these ideas. Next slide, please. So my final thoughts, and thank you for indulging all this time. I believe, as I talked about at the very beginning of my presentation, we can put together the pieces of this complex puzzle and solve it once and for all. I believe there's a solution to this. But you have to understand what an adequate amount of coverage is from the beginning. You have to have a good source to get there. According to Ken Klein's studies, he says 90% of homeowners want adequate coverage. So people want to have adequate coverage, but they don't know what that adequate amount is. we can help them figure that out with a better process of coming up with that replacement cost estimate. Matt's company, BW Builder, hopefully they can put into the chat of the content that link. For a very modest price, they can get their own independent, this is just a short-term solution. David, these are great ideas, but before the next fire happens, how do I get adequate coverage? Pay for the modest cost to hire Matt's company to produce this replacement cost estimate, and then talk to your insurance agent about that and see if they'll increase it. And we say, oh, you don't need it. Well, it's a whole different conversation, but this gives you a baseline of higher limits of coverage. This is my short-term solution. Just put it in the chat section so people can click on that link. What's the next? Oh, this is key because we have an insurance crisis here in the state of California. Affordability. Amy's worried about, and homeowners are worried about affordability. I'm also worried about that and availability. I can barely find today, after 46 years in this industry, when someone's canceled, anyone willing to insure the house. This is the worst ever insurance crisis in the history of the state of California. So if we truly want insurance to be affordable and available, we have to address the wildfire risk and eliminate it as much as we can. It's not going to happen overnight. What's the last the last point there? I'm getting my.
You got your work email?
Oh, okay. This is very important. Okay. In the past, I've been asked to come up to Sacramento on behalf of my trade association because they thought, God, David, you really know a lot. You're really passionate about this. And they said, can you speak on behalf of our trade group? I did back in 1992, and that led to the creation of the Uniform Standard of Property Insurance Disclosure. I was like, oh my God. They took my ideas and did something about it, but that didn't even work still. All these years later, that disclosure hasn't helped. So I haven't had a chance. I was only asked 2 weeks ago to come up here and present. So I haven't had a chance to share my slide deck with the people who are the leaders of the association. I'm hoping to have time to do that, to get their feedback. Heffernan Insurance, who I represent, who I'm an agent at, I haven't had a chance to get their feedback. So I'm only here today. I want to make it clear, someone, David, you didn't speak for me. Well, I'm speaking for myself. These are my own personal views that I hope you find fascinating, informative, and helpful to solve the problem of underinsurance for all of us once and for all. Thank you.
Thank you so much for being here. And I really appreciate your policy prescriptions. And while you may not have had much notice of this hearing, we are going to avail ourselves of your help going forward. And so we look forward to that and any input that you can get from your association as well.
Thank you.
Now, I know we're running drastically behind, but any quick questions for Mr. Schaefer? This Mr. Schaefer. Mr. Schaefer, the other Mr. Schaefer.
You're
Please.
starting with me, I appreciate that. I see you referencing some concerns here as to price adjustments necessary because of tariffs. Tariffs to me are stuff from foreign countries. Is it that there is part of the building materials, I guess, come from foreign countries and are subject to tariffs? I didn't realize that.
It's my, yes.
60% of building materials come from Canada or Mexico. 60%.
She said 60% of building materials come from Canada or Mexico.
Oh, okay. And then if you want to repeal or replace Insurance Code 2695.183, do we have legislators that are sympathetic to us? Is Professor Klein able to, draft something that would protect the consumer? I'm a consumer person, and I'm interested in seeing something done. My family bought a lot on the waterfront for $10,000 in the 1950s, and pretty soon it was worth $1 million, and we had a $20,000 house on it. If that $20,000 house would burn down, there's no loss to us. No, we're not going to replace it. It was zoned for apartments. The next construction was going to be 4-story condos. So really, there's no sense at all in us having insurance. And any insurance we'd have would be over-insurance, I think there should be a lot of protection laws, like maybe an agent should be obligated to advise that there is no economic risk really to be protected if it's obvious to the agent. I mean, I'd like Professor Klein to be governor and order all these things be done, you know? I just wondered, are we gonna talk about it for the next 1 to 10 years, or is there some action coming along?
Okay, you want my feedback?
Yeah.
Okay, first of all, I couldn't, as an insurance professional, answer the question about being able to advise the client, that homeowner, how to make a decision about that. If the person doesn't want to buy insurance, that's a personal choice, but I don't have any expertise in that area. In terms of reforming this legislation, the insurance code that I referenced, that's where we need more time to address how it's written today, look at the weaknesses in it, and figure out how to tighten it up and make it a much better uniform standard of replacement cost estimate. That's my answer to your question.
Yeah.
So it'll take some time in between now and when Governor Newsom has to sign any new legislation. We don't have time between now and the end of August to draft, I believe, that legislation, and that's a fair statement, right? We need more time.
But the legislature will start up again next January, and that's the time to bring a proposal that's really good. So we'll keep talking with you and hopefully get to some good ideas that we can work with there within the legislature. So questions for insurance, Mr. Schaefer?
I have no further questions.
Thank you, Mr. Schaefer. Thank you.
By the way, I don't think we're related.
No, different spelling. Mr. Imran.
Thank you, Member Lieber. I'll just ask a really quick question. It's about insurance contingencies in real estate contracts. Now, it's starting to become a new phenomenon. There's an update to the template, which the seller can tweak, protects buyers who are unable to find affordable home insurance by allowing them to take back their offer or renegotiate even after their offer has been accepted. Real estate agents and insurance brokers across the state have reported difficulties getting their clients' insurance policy. Some say it's prolonging the escrow process or even dissuading people from buying homes altogether. And real estate brokers are urging clients to get approved for insurance early on, much like they're getting pre-approved for a mortgage. So how do you think this can help fill the gap?
Okay, great question. It's a fantastic question. So there's two parts to the question. One, and I addressed it here at the end, until we can dramatically reduce the risk of wildfires in California, the availability of, when someone's trying to buy a house, it's really hard to find somebody willing to insure it today. So short term, my proposal is not going to necessarily, it won't help, because insurance companies should be, and that's what the sustainable insurance strategy that Commissioner Lara's introduced should address, that, allow insurance companies to price for this risk, because right now they're saying the premiums that we're collecting for this risk are not adequate. So part of the answer would be for homeowners to have more availability of insurance so that they can go out and get a quote and secure the purchase of their home, is by implementing the sustainable insurance strategy successfully. It'll make the availability more likely than it is today, because this, again, the availability has gone from lots of available insurance to practically none. So, I'm addressing how to get into insurance adequacy to address insurance availability. We have to address in California the wildfire risk. We have to manage that. So part of the solution is not an insurance solution. It's risk management around wildfire exposure. And that will take time to convince, the home hardening and everything else we have to do takes time to implement that. But that's the only thing, in my opinion, that's going to really make a difference. Reduce the fire risk and the availability will come back. But I have to say, honestly, this does not help availability, because it's all about that. Your question alludes to the wildfire risk. And until that's resolved, availability is not going to come back, I believe, unless the sustainable insurance strategy that Laura proposes actually makes insurance more available ultimately in the next year or two.
Appreciate it. Thank you, Member Lieber. I yield back.
Thank you. Well, thank you so much, Mr. Schaefer. We really appreciate you being here today and offering up such great information, and we will be in touch.
Okay.
For sure.
Thank you. I'm very
Thank
grateful.
you.
I'm very grateful that Amy, who I have such great respect for, said, you know who you need to talk to? Is David. So thank you, Amy, for
Excellent.
suggesting to this fabulous group here that I come and share my ideas with you.
Thank you so much. And we'll go now to Matt Everson, who is co-founder of BW Builders of Santa Rosa. He is currently active in reconstruction after Santa Rosa and this year's fires. He is a construction and loss valuation expert and has developed methods on how to better calculate full replacement costs. Matt and his business, BW Builders, has served over 500 homeowners across California. He is the co-author of the industry primer, Defining the Damages, the Builder's Guide to Scope of Loss Reports, which was published in 2023. And we very much appreciate you being here with us. Thank you.
Thank you, Chairman Gaines, Vice Chairman Lieber, and board members. Appreciate being invited here. My friends have a rule with me, I'm not allowed to talk about this stuff. Boring. But you guys invited me, so I'm gonna talk about it. And I was told 10 minutes, so I'm gonna make it 5, because I know people are waiting to talk. So I don't need to talk about who I am. I'm a business owner, I've owned multiple businesses, but 2 months before the Tubbs fire in Santa Rosa, I sold a financial planning firm. And I asked Amy if I could help her organization as a volunteer, and she gratefully said yes. And I attended my first roadmap to recovery. It was about scope of loss reports, which for those listening at home, you probably have never heard of those things. They are highfalutin estimates to tell an insurance company how much it might really cost to rebuild your home. They tend to run 50 to 100 pages long. It's every line item in a home, including how many boxes of nails will be bought. Anyways, the crowd was pretty upset with Amy because she was saying, just go find a builder and get one of these things done. And the crowd knows builders don't do this. Builders don't do spreadsheets. Builders do hammers and nails and saws. And so I said, I'll do it. And she said, you're crazy. And I am kind of crazy. So I said, let's do it. I found a builder. His name's Bill Wallace. He's amazing. He actually knows how to use the software called Xactimate and use it with the right prices. And that's what we're going to talk to today. So maybe you could go to the next slide, please. There's a pretty flawed standard. That number, 12.3, comes from the end user license agreement of the company called Xactware, which owns the company software called Xactimate. And what it says is, we don't believe our price data is correct. Now, on the front page of their website, they say they use geolocating, zip codes, and technology to provide the most accurate reconstruction cost estimates you can find in the country. And the insurance industry clearly believes that, and they train all their adjusters and agents on that fact. But as Mr. Schaefer told us, it's not right. And as I see it, all day long, that's why we started these reconstruction cost estimates that he was talking about, which you can get for about $150. These regularly come at 50% above what a Value 360 or an RS means, or any of these other CoreLogic, Marshall Swift, there's a bunch of them out there. They're wrong. And they're not just wrong, they're misleading. That's why I don't believe we need any new legislation. There's a business code, 17,200, that prevents fraud from being enacted in business. If I was a financial advisor, and I used to be a certified financial planner, and I handed any of you a prospectus that was materially misleading, I could go to jail. But daily, insurance companies are handing estimates to their clients that are materially misleading and saying, hey, check it out. If you like it, you like it. I think that's simply fraud. And it can be stopped immediately if the Secretary of State wanted to go ahead and look into that, or the Attorney General. That's one of my things. So next slide, please. Why is the standard allowed, right? There's nothing in an insurance policy that says you must take these numbers from the insurance company. There's nothing in California Insurance Code that says that. So the key question is, why are we misleading consumers? And why are insurance companies using this product or these products as standards? The real key question, and the professor alluded to this earlier, is that they have the data. They write checks on it every day. They know exactly how much it costs to rebuild homes, because we've lost thousands and thousands of homes in California since 2015. to wildfire. They know exactly how much it costs. And yet, I'm down in LA every month. I'm dealing with hundreds of people that have lost their homes down there. And every single one of them, not 90%, not 99%, 100% receive an estimate from their insurance company on the rebuild cost that's 50% or more lower than what it will cost to rebuild their home. That's fraud. That's not some starting negotiation point like the professor referred to. In my opinion, that's fraud. That's misleading someone materially. It gives anxiety. And as a financial planner, if somebody came to me and said, hey, Matt, should I get into a contract, a fixed bid contract with a builder who can take my lot if I can't pay him, when my insurance company is telling me it's going to be half as much as I know it's going to take to build that home, what if they don't come up with the other money that's in my coverage? What do? Do I sign that contract? And you go to the insurance company and say, can I get that extra money? Maybe. That's their answer right now. To me, that's the problem. So let's talk about some solutions. We don't have to make new legislation. Can we go to the next slide? Please, yeah. There's lots of indices in lots of industries. We're all familiar with something like the S&P 500, but there's lots of construction indices. There's lots of other things. The state of California can be the leader in the nation on this if we developed a public database that talks about how much it costs to build a home by county, by zip code, by whatever we wanted to do. And we can get that information from builders, from the insurance companies that are now obligated to give it to the state, and from other interested parties, so that nobody has to rely on a Value 360. Nobody has to rely on my estimate. Everybody can simply point to this public index and look at, in the Sonoma County area, an average rebuild cost for a standard home is X amount of money. In Los Angeles County, it's this amount. So now no insurance companies or insurance agents are competing against each other with different estimates to rebuild. It's a public database held by the state of California, maybe governed by the state of California. Maybe it's a private public entity together. We could talk about that, but it would really help reduce this issue of underinsurance if everybody going in to buying insurance had a better idea what it costs to build a home. Next slide, please. Some other solutions, regulating builders. This won't be popular with the builders. I've never been in an industry that is so different from builder to builder to builder. I come from the financial planning world where everybody is beholden to quite a lot of different regulations. There are regulations on builders, but there's not a heck of a lot of enforcement. In my opinion, I think you could actually create a standard certification program for builders. Building a home after a fire is completely different than building a home for someone that just bought a lot and wants you to build the home, financially speaking. And also from a standpoint of what your client is going through, the pressures there. There's always a great recipe for fraud in finance when you increase the time that you have, or decrease the time that something has to get done and decrease the amount of people that can do it for you. So we have not enough builders, and we have 3 years after a federally declared disaster before our insurance claim is closed. So that creates opportunities for fraud. So I believe if someone wants to rebuild a home after a fire, they should be certified to do so as a builder. That shouldn't be that hard to do, and we could facilitate that through builders exchanges. Next slide, please. Required some shared responsibility from the insurance industry. David didn't like this, and I know the insurance industry won't either. But when I was a financial advisor and I handed you a prospectus, that prospectus needed to be factually based. And when I hand someone as an insurance agent a Value 360, there's no basis in factuality to that number in California as far as I can see. So if the insurance industry is going to provide some sort of guidance on how much it costs to rebuild the home, then they should have some shared responsibility when that number is not right. The agents should have some responsibility of educating themselves on what they are insuring, and the individuals that buy the insurance are also on the hook here. They have to understand better what it costs to build their home. And that's all about education, and if we had that index that I talked about earlier, that wouldn't be that difficult. Next slide. Already to my conclusion. See, I'm going fast. This is fixable. It takes a little bit of leadership. I've been stunned since 2017 and the fires hit my town of Santa Rosa. And I get emotional still. When you see basically pictures of Hiroshima When I walk through the Pacific Palisades and just see ashes, when I saw that in Coffey Park and I saw that in Fountain Grove where I live, it hits you, and it still makes me emotional. The smell stays with you forever. And so this doesn't have to happen. And what we can do, I think, and you as the Board of Equalization have a chance to drive some meaningful change. We can adopt some changes by recognizing the impact of these flawed systems and enforcing some regs that are already on the books. We could make insurance policies a lot easier to understand. I've been working in the insurance industry since 1995. I started with a subsidiary of Transamerica. They talked back then about how they're trying to make their policies more understandable. What David just said, nobody can read these things. But they are complicated contracts. We can make a little bit of effort to make those more easily understood, make the claims process more easily understood, and we can protect homeowners, and we can ensure some efficient, proper rebuilding, and therefore protect our communities in California. When homes can't get built quickly or affordably rebuilt, local economies suffer. Property values decline, tax revenues decline, families move away, and California is affected negatively by all of that. So let's get this right. We're not just fixing some kind of policy failure or insurance company conspiracy. We're stopping this slow bleed that's costing families money, costing neighborhoods, and costing the state more than most people want to admit. So thank you very much for the work you do. Thank you for listening to me, and I'm here to happy to answer any questions.
Thank you so much for that. And I have to say that, many of us who are up here, we do engage with the emotional side of these public policy issues because we have constituents and we see very real people behind it. So it's actually very refreshing to see a numbers person who is touched by the reality. And it impacts me deeply that when people get through with the worst time of their life, they're just about to start a very, very long, very painful process of trying to rebuild their lives. And there's an impact on families. And, when I'm home at night and I think about the families that aren't going to have the wedding that their daughter has dreamed of because they no longer have the money. And the divorces that result from one of these instances, and on and on. And for someone who's lost a family member, pets, their house, their neighborhood, their entire city, it's very profound. And so anything that we can do, we are interested. So questions for Mr. Everson? Mr. Amran.
Thank you, Madam Chair. I want to thank you for your very concise presentation. And I want to talk about this idea of home hardening and the idea of building a home hardened house. I saw a news report last night in Sonoma County. There's a vegetation fire, and because the homeowner was able to cut the vegetation and home harden their house around, the fire stopped at the property line, and it saved the house, and it saved all the neighbors' houses as well. And the idea is, if you do home harden, for every dollar you put forward, you save $5, $6 on the back end. So my question is, should insurers incorporate mitigation efforts when they determine premiums, and is that something that you would support?
David says he can answer that. I think they do include home hardening as discounts. Mr. Gaines might be able to say more to that. David might. They do. I think the harder part of that equation is those things are expensive. Hardy-backed siding or cement tile roofing or the tempered windows or the venting. There's a lot of science actually that shows that you can really harden a home. When you go to, I'll give you an example down in the Pacific Palisades, there's a lot of very wealthy people down there. And then there's also a lot of people that have, like Board Member Schaefer had bought the home in 1960, and they're 80. And they're on a fixed income. And they're not the producer of the last Hollywood mega hit. And they don't have an extra $75,000 to harden their home. Not to mention, there's a 5-foot offset in the Palisades. So my home, and you'll see this down there, there's many homes that were remodeled recently that have all of these hardening provisions that are now ash. Okay, so it does help. It is expensive. It could be something that the state offers in the same way that we do for solar panels.
That was my question. My next question, should the state of California examine a tax-free incentive to people that to assist in home hardening efforts and what
I
that would
believe
look like.
unequivocally, yes. Yes,
Thank you.
yeah.
Mr.
Previous
Gaines.
comment. Thank you for your presentation. Really appreciate it and really like to dig into it deeper. But just related to the Palisades fire, I went down there and walked through it and the aftermath, and fire chief took me through and he showed me it was just city blocks after city blocks. And that 5-foot setback like you're talking about, and he said it was just the thermal heat that transferred from house to house to house and took down the whole block. I know that the construction standards have changed for new construction in terms of stucco under the eaves and tile roofs and things of that nature. But focusing more on this replacement cost issue is a real challenge. And I'm not quite sure, what the right answer is to it.
It seems to me.
You've given two proposals today,
Yeah.
right? One based on the consumer, the other based on basically everybody else. So I think we need to take a look at those and figure out kind of what the right pathway is.
I'm pretty sure Colorado, the state of Colorado, the legislature did pass a bill last year that to collect statewide
Building data.
construction costs, actual
Yes.
what it costs to put back those homes. And they're still working on that.
Right.
I'm sure it
think-
would be contested by the industry, the insurance industry.
yeah.
However, it's just data, and we
Right.
just have to ask for it and collate it.
Yeah, but there's a lot of nuance to it too.
Oh, yeah.
Because you've got consumers that don't want to pay. So how do you address that issue? Let's say you had accurate reconstruction costs and they just can't afford it. I don't know how you address that issue. It's happening right now in our insurance crisis.
Sure.
I talk to people who have their homes paid off and they're letting their insurance go because they're on a fixed income and they can't afford it.
It's a terrible gamble. And if you look in Florida
It
right
is,
now, insurance premiums are in the neighborhood of $30,000 and up if you're coastal. So insurance is a simple math problem that's convoluted by marketing. But it is, how much do I have to charge so that we don't go out of business if that risk actually happens?
Right.
And so that's a tougher question. I think though, where we stand right now, which is we're going to pretend that it costs a lot less, isn't helping.
Yeah, I know you go higher deductibles.
You can do
That's
that.
a way to save some money, to go
You
on
can
a higher deductible.
I think we can reimagine the entire policy in a lot of ways.
Yeah.
In Australia, where they have wildfire issues, they have these parametric policies where people are allowed to purchase whatever coverage they want, 250,000, 500,000, or $1 million. Their premium can adjust based on that. Now there's no complaints as to being underinsured. So
Yeah.
there's options, we just don't have it in the marketplace.
Is
right
that separated for wildfire exposure? Would it be a separate coverage or?
They have it for wildfires specifically.
Right,
Yeah.
right. But if you can get an accurate replacement cost.
That's
Right.
that's the cornerstone of the data. I talked to an actuary the other day that was modeling for one of the largest actuarial firms in the world, and about climate change and about the risk. And I asked her real quickly, like not disrespectfully, like, what are you modeling for? Oh, well, the risk. Well, what's the risk? Well, the insurance companies want to know how much it's at risk here. I said, so what's your fundamental cornerstone piece of data then? And she didn't know. I said, your building costs. Where are you getting your building costs? And she said, Verisk, which owns Xactimate. I asked, are they giving you the numbers that they give people in Value 360? Or are they giving you a different set of numbers?
Yeah.
And that's when she ended the call. So I don't know.
Yeah.
But the reality is that's the fundamental part of this equation. We can figure out how to price policies if we know what's at risk.
Right.
If we continue to ignore, see no evil, heal no evil, speak no evil about this 50% underinsurance number that's being perpetrated on Californians and the rest of the country to different degrees, then we'll never get to the solution.
If you get the right value, I guess you could put the onus on the consumer as to whether they want to insure the value or not.
Right, I can't buy a home in Beverly Hills. I cannot afford it.
Yeah.
And there isn't some sort of governmental guarantee to allow someone to live in Marin County either. I'm not trying to be flippant, but It's like the home on the coast in Florida that's been smacked by a hurricane 5 times. Should the rest of the taxpayers in this country be subsidizing their insurance rates?
Yeah, there's a lot more risk on the beach. I heard the elevation, I didn't realize how flat Florida is.
Yeah,
But
it's
there
sea
just
level.
isn't much elevation there, so when that ocean comes in,
I mean, to a certain degree, we've been spoiled in California with very low insurance premiums on very valuable homes.
yeah. All right, well, thank you, appreciate it.
And Mr. Vasquez.
You hit on several of the questions I had, especially on the underinsured. And, I'm in the Santa Monica area, and I went through, actually with our senator here, going through the devastation there. And I'm wondering, has your group, BW Builders, been contacted by the folks in LA, specifically the Palisades,
Absolutely.
on the rebuild?
Yeah, we do these things called scope of loss reports, which uses Exactimate. So we have over 100 cases down there right now where people, so I have a boatload of data from the numbers they got before they got their insurance, the numbers they are getting from their insurance companies right now after their home is in ash, and the way the insurance companies are treating them. It's not pretty.
It's good stuff. Thank you.
Okay, well, we so much appreciate you being here today, and I had a chance to contact my husband while we were here and ask him about our own policy, and you had said that $800 a square foot might be what we're at, and we currently have coverage for $297.
There you go.
So
you're calling this entire
I am
thing.
unknowingly one of the the poster cases.
You're on there.
I
Yeah,
would challenge
and-
y'all to look at your policies, try to figure out how to add up coverage A plus coverage A extended, plus other structures, plus landscaping, plus ordinance and law, plus debris removal, figure out how all that kind of kicks in, and then take your square footage of your home and divide it by that number. You'll come up with around $300 or $400 a square foot, because that's what Exactimate and Exactware and Value 360 are actually telling people it costs to build in California right now. So you're probably, almost all of us who have a home that are listening right now, I would just bet a beer that you're underinsured. And you don't want to be.
No, I have not thought that I am. Yes, please.
Can I barge in on just a question to follow up on that? So what is the replacement cost that you're finding for the LA fire homes in the Palisades? What should that
I'm
number
getting into
be?
trouble here, but in the Pacific this is one of the problems for the insurance company. If you have a Ford Escort, we know exactly what the fender costs. If you bought a home in 1980 that was built in 1950 that you remodeled in 2000, it's not quite as linear. It is right now anywhere between, there is actually a group out of Santa Rosa called Synergy Homes that can actually build for around $400 a square foot. You have no choice at all in selecting. There's another Thomas James, which is local down there. They're cookie cutter homes. You get 5 choices. So that's the low side. But if you're hiring a contractor directly, you're starting at $800 a square foot. We estimated a home in the Malibu area at $1,700 a square foot. So there is a huge margin. Over in Altadena, it's a little bit lower, 700 to 800, 900, depending, again, on what kind of trim the home had. If it was a high level, lots of hardwood, lots of high level appliances, that kind of stuff, it kind of kicks the price up. But,
Yeah, thank you.
Okay, well, thank you so much, and thank you to all of our presenters. We are going to continue to tap into your knowledge and expertise, and we're going to go to our input here in the auditorium today first, and we have Mr. Jason Vallejos, who is Executive Vice President of Syndicated Insurance. Please.
Thank you, Madam Chair, for inviting me over. And I want to thank Tony for flying me up, having me fly up here and join this great forum. Great speakers. I am a national principal of an agency that works with multiple lines, including Medicare and commercial insurance, home insurance, you name it. But this was really interesting, and we have to go back to the principles of insurance. So when we're talking about the Value 360, I've been in this business over 27 years, and before we had that technology, the Value 360, for example, we would have an inspector go to the house, take the photos, do a report, and evaluate the house. No different than when you buy life insurance. You send somebody to take your blood, take a urine sample, send it to a laboratory. It costs to do that, but that's the cost of doing business for insurance companies. So I think we just have to go back to the basic concepts of insurance to help mitigate some of that underinsured. My interest today was mostly what we're seeing in Southern California with the people being uninsured. It's just there's a tremendous amount of folks that we know lost their homes, have no insurance, are unable to find insurance, can't afford it, or there's just not a market for it. The California Fair Plan is getting more and more difficult to underwrite and get policies for those folks. Even the surplus lines brokers like Lloyd's of London, that's when I kind of stepped back out of California, because even Lloyd's of London doesn't want to insure in California. One of the first insurance companies. So right now, I'm playing NOAA. I'm telling you, there's rain coming, so we have to mitigate these losses. And like they presented earlier, the most you can get from a flood policy is $250,000. And trust me, we're now dealing with floods. So if you don't mitigate these losses, put brush where there needs to be brush, we're gonna have tremendous amount of losses over mudslides and floods that were caused by these fires. So just, and this is coming from multiple experiences. I have interests, I live in Ventura County, so we see things in Ventura County. I have a son who's a firefighter in San Diego, and then I have a business in Los Angeles. And there's different needs for every single area and every single county, but you really, really have to understand that there is an urgency to mitigate losses that are expected. And who knows, God forbid, another fire comes, and we are ill-equipped to handle another one. So I know you have on calendar legislative reviews and collaborative efforts, but we are running on an emergency effort, and we have to clear up the brush, we have to clean up the Palisades, whatever we have in Malibu, and get ready for the floods and the next fires. So that's just something I wanted to share. Thank you again for allowing me to speak, and such a pleasure being part of today's meeting. It was very, very advantageous for all of us that are in this business. Thank you so much.
Thank you very much for coming up. We really appreciate that. Thank you. Thank you. And we'll now check with we don't have others who are waiting to speak here today, and we did get written comments via letter. Great, and so the letter that was received from the insurance industry will be posted.
Yes.
And so we'll go to our AT&T moderator. Moderator, could you tell us if there's anyone on the line who is waiting to speak on item 7?
Thank you. And if you have a comment on this item, please press 1, then 0. Again, if you have a comment, please press 1, then 0. And ma'am, there's no one in queue at this time.
Okay, thank you. And so for folks who are listening, watching, et cetera, we would also appreciate getting your written comments by email, and you can find a way to do that on the BOE's website at boe.ca.gov. And we do appreciate receiving your comments over time and having you consider coming forward to the BOE when you have any concerns relating to property taxes. And so that concludes this item, and I'd just like to thank everyone who has participated. Obviously, this subject is of a great interest to us, and so I definitely plan to be working on it on an ongoing basis, and we look forward to everyone's participation with us. And with that, I'll turn it back over to you, Mr. Chair.
Yeah, thank you very much, Vice Chair Lieber. Really appreciated the presentation today, and a lot of information, great opportunity to learn, and some good ideas that we can take a look at. And at this stage, though, I'd like to move forward to our next item on the agenda. And that following item is closed session. It's item number 8, pending litigation. And that is for La Paloma Generating Company LLC versus California State Board of Equalization et al. And the Los Angeles County Superior Court case number BC 645390. Appellate Court, Second District, case number B 330643, Government Code 11126E. And the Bagley-Keene rules, the new ones state that we must go to public comment before going into closed session. And so is there any public comment and I'm imagining as it relates to closed session? So these cases, is there any public comment? Okay, seeing none, and we don't have anything written?
And nothing in writing.
Okay, and so let's go to the AT&T moderator. Please let us know if anyone is on the line and would like to make a public comment regarding these items on the agenda.
Thank you. And if you'd like to make a public comment, please press 1, then 0. Again, it's 1, then 0. And we have no one in queue at this time.
Okay, thank you, moderator. The board will go into a recess for closed session at 3:59.
You guys ready?
Okay, the board has returned from closed session, and we will reconvene the board meeting. And the time is 4:13 PM. Okay, and Ms. Taylor, do you?
Yes, I'd like to make an announcement. The board members met in closed session and discussed litigation matters. No action was taken.
Wonderful, thank you, Ms. Taylor. And if we could just quickly go through these items on the agenda, starting with Executive Director's report, Ms. Stowers.
Good afternoon. I'm Yvette Stowers, Executive Director. My report will be brief. First of all, we know that the governor issued his May revision budget. The budget was issued on May 14th. They're in negotiation now. The budget, there's a projection of lower than expected revenues by 16 billion, 10 billion in reduced capital gains, 2.5 billion in income in weaker corporate tax profits, 2 billion in less in wages and personal income tax, and 1.5 billion reduced in personal income tax.
Is that less than projected?
Yes,
Okay.
yes. The May revision also assumes savings of $766 million for salaries and wages. To achieve the savings, the bargaining and negotiation is commencing with all of the state bargaining units. The BOE budget remains relatively the same as it was in January. The May revision has incorporated the reduction in the BOE's positions and corresponding funding that we have been talking about for quite some time now. The BOE's working appropriation is proposed now to be 33.3 million from 34.5 million. Okay, that's my update on the budget. Finally, I'd like to highlight some upcoming events. The meeting with the Northern California Assessors Association Annual Regional Conference is scheduled for August 4th through the 7th in El Dorado County. Members, I will continue to keep you updated, and I'm available for any questions that you may have. Okay?
No questions. Any questions?
We are going to be brief, and the next one is going to be the Taxpayer Rights Advocates Report.
Okay, and could that be extended to our next meeting, or?
Sure.
Or
Just something
super brief?
She would like to brief you on something really quick.
Okay.
Okay. So my name is Lisa Thompson. I'm the State Board of Equalization's Taxpayer Rights Advocate. So quickly, the counts as far as completed case counts, they are included with the memo that's attached.
Just focus on.
Okay, it's attached to the PAN. So there's just 41 completed cases, and you can look at the topics at that. The other part is that we completed tasks toward getting ready for our Taxpayer Bill of Rights hearing that's coming up in August. We have updated our web pages to put basically the last year's to the past, and then all the information on the current years. So that's available. We will be mailing posters and flyers to different agencies, asking them to post them. That will occur in early June. So I'll update you more of that on that next month. However, we also did update 2 Taxpayer Rights Advocate information sheets, which were for Prop 19 intergenerational transfers. An LTA was actually issued last week on them. It is LTA number, I don't have that, let's see, 2025-015, but basically they were updated, the parent-child one and the grandparent-grandchild one, to provide additional information on the prospective relief for the homeowners if the homeowner's exemption was filed after the 1 year. It also was expanded to include additional information about the requirement as far as the move-in requirement within 1 year, and that doesn't have any exceptions, so it's a little more clear on that. It also discusses one child moving out and another moving in, and that being acceptable and how that works. So that concludes my update.
Great, thank you, Ms. Thompson, we appreciate it. And now the next item is item 11, Legislative Research and Statistics Division Chief Report. Mr. Angelo, okay, yeah, very brief if you could, we're just trying to
I'm sorry, Chairman
Keep it
Gaines and members. Ted Angelo, Ledge Director and Chief of the Legislative Research and Statistics Division. So I'll just give you a very brief overview. The first House Fiscal Committee deadline was last Friday, where a number of the proposals were on the suspense file and in the appropriations committees in both House. At this time, we're tracking about 22 bills and constitutional amendments included in that. And 5 of the 22 we're tracking were held on suspense. So I'm just giving you the statistics rather than going into great detail. But I will say that the disaster relief legislation, since it's kind of topical today, the 3 bills that we're primarily tracking moved forward. So they were not held on suspense, and those are AB 245 Gibson, SB 293 Perez, and SB 663 McNerney. So, and I won't go into the topics of the 5 that were held on suspense unless anybody wants to hear about it, and I'll leave myself. That's it. Unless anybody has any questions, I'll stop there.
Okay, members, any questions?
I do, just one question. There's this bill, it's causing a lot of controversy in the Capitol, AB 942, has to do with solar panels and the agreement they have with solar panels and the idea that if you sell your home, do you receive the favorable rates? Because a lot of these people locked into a 20-year contract with the solar panels and receiving incentives, and there's been this argument about the shifting, who gets the shift essentially when it comes to the energy grid and the benefits that come with that. And because we've dealt with solar panels here at the Board of Equalization and the property tax incentives as well, if you can give me a little analysis and send it to myself and the controller, that'd be great. Thank you.
We'll take a look at it, but thank you. That's not the bill that we've been tracking for active solar energy systems, but that's a different one that applies to what you had
AB
indicated.
942 by Assemblymember Calderon. Thank you.
Okay.
All right. Thank you, Mr.
Thank
Angelo.
you.
We appreciate it.
That's as short as I can go.
Yeah, thank you. No, that's good. And, okay, do we have any closing remarks prior to?
Before we
adjourn?
go, we have to take public comment on the
thank you.
ED reports.
Yes, okay. We do not have any written comments or anyone in the auditorium who wishes to speak or make a public comment to the executive director's report. So let's go to the AT&T moderator. Please let us know if anyone's on the telephone and would like to make a public comment regarding these items on the agenda.
If you would like to make a public comment, please press 1 then 0. Again, that's 1 0 for public comment. And there are no comments in queue.
Okay, thank you, moderator. Members, any closing remarks regarding, and we have adjournment, yes. Vice Chair Lieber.
Thank you. I'd just like to thank my fellow board members for your perseverance through our agenda item today. I think it's a very important topic, and we are definitely going to get our hearings down to the point where we live within our limits time-wise, but really appreciate your patience with that. And Mr. Chair, you mentioned earlier the very tragic killing and a vicious instance of anti-Semitic rage of Yaron Lashinsky and Sarah Milgram. And I'm wondering if we might adjourn the meeting in their memory today, and if it might be possible to send a letter to Israel Aid in California relating to that. It was an event that was being held to feature Israel Aid, who have been very helpful in the Los Angeles fires. And I had the chance to work extensively with them on the refugee crisis in Greece. And it has really been such a shocking instance for a charity event to be the location of such a vicious act. And so I'd be more than happy to work with staff to get them the address
That would be wonderful.
for Israel Aid. Thank you.
Yeah, thank you. Yes, Member Vasquez.
Thank you, thank you, Vice Chair, for the hearing. I know it was a tight schedule, but it was really great and appreciative. I just wanted to, it's German, I was going to do a German, or you had something you had to add? Go ahead.
Julia Himovitz on behalf of the legal department. The offer of writing a letter is really kind and touching. Unfortunately, I think it would be best for the members if you'd like to write a letter individually. I think that that would probably be better at this time.
And I could potentially share that information through our executive officer about the contact information for that.
That'd be great.
So that the chair
Yes,
can
thank you.
participate.
Sure.
Thank you.
Thank you.
Thank you. Yeah, I would just like to adjourn this meeting in memory of Jennifer Barraza Mendoza, a resident of Hollywood and a hardworking and accomplished young woman who served in multiple roles in politics and government policy, most recently serving as chief of staff for the LA City Council member Kevin De Leon. She died in May 13th, 2025, following a long battle with cancer at the age of 37. I went to the funeral, and it was really heartbreaking to see this young woman who had such a career in such a short period of time that we lost her. She started her career with SEIU back in 2009, and then became a deputy director for the state when he was in the state Senate and the Democratic caucus. And in 2017, she was appointed to the City Central Area Planning Commission. 2018, she began working with then Senator De Leon, and most recently as chief of staff. She helped bring many parks and affordable housing projects in the 14th district. She also served as a principal at Hilltop Public Solutions as a member of the National Educational Association. I would like to send my sincere condolences to her family, friends, colleagues. She will be greatly missed. Thank you.
Yeah, thank you very much. It's very sad, and
Yeah, I was too young.
thoughts and prayers with the family. That's really rough. All right, Deputy Controller.
All right, Member, Chair Gaines, I'm going to try to close this out. I want to thank you on behalf of the Controller. It was really, really nice to see her this morning. Two things. Number one, there's a huge heat wave coming to the Central Valley, including Sacramento. I think it's record highs up to 110 degrees. So we're starting to see heat waves now in California, and we talk about tornadoes and hurricanes and earthquakes, but it's actually heat that's the #1 killer of humans when it comes from the natural world. So just urging everyone to be safe and cautious, hydrate, and find a cooling center if your air conditioner is broken. And then lastly, May 15th was Peace Officers Memorial Day, and May 11th through the 17th was National Police Week. And I got to join a ceremony on the Capitol Mall of the California Peace Officers Memorial. And I got to see police and law enforcement from all over California come together to honor the sacrifice and courage and dedication of officers who put their lives and lines on the duty. The governor, the attorney general, the controller, they honored 6 officers who have lost their lives in California in the past several years. And in total, since California became a state, there's been 1,500 officers who have lost their lives in the line of duty, just paying their respect and tribute. And in that Peace Officer Memorial, which is in front of the Capitol, there's a new statue. If you can all check it out, it features a woman police officer now, and it speaks to that idea that we're all brothers and sisters, and then the sacrifices that women police officers are also making, putting themselves on the front lines as well. So I thought that was very, very moving, and it's a great, great tribute to everyone that puts their lives on the line, and all the first responders who do the incredible work day in and day out. Thank you, Mr. Chairman.
Yes, thank you very much. And we will now adjourn, and the time is 4:27. Next board meeting will be held on Wednesday, June 18th, 2025. Is that correct date? Okay, I'm seeing another date, I'm seeing 28, but it's June 18th. Thank you. 2025 at 10 a.m. at the Maley State Office Complex in Sacramento. Thank you.